All right, what's up, y'all? So, hope you're having a good Sunday. And yo, what's up for you guys watching this on the YouTube replay? I really appreciate y'all. We got a good one for you because the market opens in 12 minutes. So, in 12 minutes from now, we'll watch the stock market open, see how stocks are doing. And at the beginning of the stream, real quick, I want to do a stock of the day, show you a stock that I really like. I also want to see how crypto's doing real quick. I don't know what I just clicked. Where's Bitcoin? Bitcoin is at 117,000. So, if I had to guess, the market's not going to open to green, but we'll find out in 15 minutes. And I'll do a quick portfolio update. Here are my three main portfolios. So this right here is my main taxable dividend only portfolio. So every stock in this account pays a dividend, and all these are in the S&P 500 as well. We also have a small Roth IRA over here, $1,400. I'm trying to deposit more in this account right here, but we have three new holdings in here that I just made a video about: TSSI, DCTH, and GHM. Those are my three new stocks that have really small market caps, so gotta watch out for those. And I also want to go over InnoData. That's still one that I really like. And then we have our buy and hold portfolio. This is my Moomoo account. And yo, what's up, guys? Yeah, happy Sunday. The market opens in 10 minutes. We'll see how the market opens. And here's my buy and hold portfolio. So once I buy a stock in here, I try and just hold it for the long run, try not to ever sell it. Obviously, we have some really good winners in here, and we got some losers like this Perion Network right here, which is like 80% of the market cap is just their cash value. Very interesting play there. And then finally, this is my kind of fun account. This is my main my growth account where um, I'm trying to buy more risky stuff, not like the main blue chip names. Like my most recent purchase in here is PSIX. We also have some big losers in here like UiPath, Zoom. T-Mobile is one of my most recent purchases as well. And Progressive Corp. Man, Progressive stock feels like it's at such a great valuation right now, in my opinion. Yo, what up, Peter? Do you think SBET does good now that ETH pumped? Yo, I do wonder that one. And yo, what's up, Connor? Yeah, we'll look at Rubrik. Give me one more minute here. But I want to show you a stock that I really like, and it's one that I do own that I want to introduce you to. And I just recently made this a bigger position for me. But this is ticker symbol URI, United Rentals. And we have 5 shares of this company right here. And if we go down here, not too long ago, I bought another share at $715. So this is your main this is a great dividend growth company, but they have the number one market share for renting out like equipment. A lot of so many industries use United Rentals. Like there's a guy in my neighborhood who has a United Rentals truck. So let me show you the financials on this company. Yeah, then we'll look at SPED, we'll look at Rubrik, Nebius. What's up, guys? Yeah, if you got any stocks you want to look at, let me know. So basically, first off, the net income is crazy here. They're making over 500 million a quarter. It fell 4% year over year from a one-time adjustment. They had to pay like a $60 million one-time termination fee. But look at the dividend as well. They have a really nice yield and a low payout ratio, nearly a 1% dividend yield, 16% payout ratio. So, and the main growth driver is actually their specialty rental revenue growth. They just acquired Yak, and they're called Yak Mats, and basically this is leading a lot of their specialty rental growth, which is up 22% year over year. So anyway, that's one I really like. They trade at like 20 PE, really low valuation. So RBRK, this is Rubrik right here. Yeah, let's check this one out. By Nebius Group we'll check out Nebius as well. I think Nvidia owns a little bit of that company as well. So here's Rubrik right here. This is a software play, $17 billion market cap. So really big market cap. Yeah, software as a service is where all the revenue comes from. And look at the growth here. I mean, this is why people love these kind of stocks, because the revenue is up 48% from the previous year. That's really good growth of the revenue. And they're still losing a bit of money every quarter, like 100 million, but the hope is they'll kind of outgrow that one day. So let me show you Nebius. So here's what's cool. We can actually see NVIDIA's portfolio, see what stocks they own in there, and let's see what they own. So obviously they own CoreWeave, ARM, APLD, and then their fourth largest holding is actually Nebius stock right here. So yeah, Nvidia is a shareholder of this company right here, and this is why I like this one as well. I mean, I gotta double check the valuation, but it's just a growthy company. Check this out. The revenue last quarter was 11 million. Now it's 55 million, up 380%. So I love the revenue growth there on Nebius. They are still losing money every quarter, but again, another one that's gonna hopefully outgrow that. So I love the growth there. Can you explain a 1% dividend? Yeah, that means you just get 1% of your money back in cash every year. Dividends is just like a cash payment. Some companies give you it's kind of like a non-cash dividend by buying back their own stock, which is really cool. So here's DUOL. Yeah, what up? IBRA said, thoughts on Duolingo. Looking to take a large position pre-earnings call. So yeah, let's go check this one out. This is a company I love, by the way. Yo, what up, Jello? Yo, what up, guys? Hope you're having a good Sunday. Yeah, we'll look at BULL. I like that company. I use them as well. So here's Duolingo stock right here. This company just impresses me every time I look at them. So most of the revenue comes from their subscription business. So this is a subscription model company, and look at this. I mean, this is the kind of company I'd want to just buy and hold for the long run. One with tremendous growth. Like if you look in the middle of my screen, the year-over-year numbers. I mean, they're literally growing 50% year-over-year every quarter. So phenomenal growth on their subscription revenue. I guess then they get a little bit of advertising revenue. How's that doing? It's up 38% year-over-year. So that's a nice little boost in advertising revenue. So subscription and advertising play. And look at the free cash flow. I mean, the company made over 100 mil of free cash flow. The net income is 35 million. So very profitable company. I mean, who knew Duolingo was so growthy? And I have some other companies like that. They also have no debt. They're in my debt-free watch list. So every stock in here has no debt, like DocuSign, Duolingo, Pinterest, Opera GX browser, Zoom, Reddit, Yelp, all debt-free companies, kind of in the same boat. I love those. So, oh yeah, let's look at BULL right here. Then we can look at Zscaler. Yo, what up, Sermon, Barella? Hope you're having a good day. So here's BULL right here. So what is Weeble as well? I use the app right here. It's basically just a brokerage, basically a Robinhood stock competitor. And, I've probably given them a lot of fees through my portfolio. But yeah, look at them. They were up 17% on Friday. And then if you look after hours, kind of in the top middle there, they fell 8%. Because I believe that, yeah, they basically diluted their shareholder by a little bit. So that was a bit unexpected because they just IPO'd right here, and then they did basically another share offering. So it was a little bit weird, but still, I like this company. And if you go to the net income, it looks like they're just getting, or obviously they just IPO'd, so there's not too much data. But look at that. They made 12 million the most recent quarter, 10 mil the quarter before. So yeah. Can a stock have no debt and still be unsuccessful? Absolutely. Just because they have no debt doesn't mean it's a good buy. Like look at Yelp, for example. Yelp is flat since let's see, what year is this? Since 2013. Same with like a Pinterest. Pinterest is kind of flat since its IPO. Anyone heard of Pinterest before? Actually, let's see how many users they got. I know we can check the users. So if it'll load here. Okay, check this out. Monthly active users on Pinterest are 570 million, up 3% year over year. Yeah, again, just because they have no debt doesn't mean it's a good buy. But yeah, man, look at that balance sheet. Very nice. Making cash flow every quarter. They had a little one-time adjustment last quarter, but still. Yo, Travels, what's up, man? I have 1,126 consecutive days on Duolingo, but I don't pay for the subscription. Yeah, hey, what up? That's awesome, man. You must be helping out Duolingo stock. Yeah, Duolingo, what's cool is if you don't pay for the subscription, which is 83% of the revenue, you probably are watching some ads, some advertisement. And look at that. The advertisement revenue is up 38% year over year, 17 million just in the most recent quarter. So that's pretty cool. Then they have a Duolingo English test. Oh, well. So anyway, yeah, they're interesting. All right, let's keep going here. Looking to enter around 350. Business model is unbeatable. Yeah, nice, dude. So Tesla, don't they report earnings this week? Let's go check out Tesla. So July 23rd, really? Hold on, we'll go check what reports earnings this week after this. So right now, the thing with Tesla is I don't love the valuation. I wouldn't buy this one. If you buy now, you're basically, I wouldn't buy this one right now into earnings, because if you buy it now, you're basically betting into earnings. But um, they're in a rough spot because their total vehicles delivered are down 14% year over year. So they have this high valuation, the high PE, high multiple, and they're not really growing. Like, look, 85% of the revenue comes from their automotive business, obviously, and it's actually down 15% year over year. So it's not growing. So it's a bit rough, and their margins are kind of collapsing. So if they show a beat on any of this, that'd be great news. But yeah, look, the revenue fell 9% year over year, and the net income fell 70%. So that's rough. I mean, their margins just fell to a 2%. So it's rough. We're really just waiting on earnings to see if robotaxi will help out what the Cybertruck deliveries are and stuff. Elon Musk, largest shareholder, obviously, 12.75. That's how he's one of the richest people in the world. He owns 12.75% of a $1 trillion company. So absolutely crazy. And hey, let's go see what reports earnings this week. Someone said what app is this? Hey, this is a brokerage right here. It's in the link tree in my bio. First link there if you want to get this app I'm on. So let's go check out the earnings calendar this week. Actually, I can filter to just stuff on my watch list. Anything important? Oh, Google, man. Google, Amphenol, United Rentals, Lamb Weston that day, Honeywell, and Comfort Systems. So actually, a lot of my stocks report earnings this week. So that'll be interesting. Isn't the robots under Tesla? Yeah, I don't think Optimus has really made any money yet, but that will be a future. That's where, yeah, a lot of the market cap, the high market cap of Tesla's going to come in. The future of robotaxi and robots. How accurate? Yeah, it's really accurate. So someone said Lucid. Yeah, so we just looked at Tesla. I'd way rather buy a Tesla than a Lucid right now. Even though the momentum is really strong, I mean, it's where it's at just a couple months ago after the dilution. I mean, so Lucid, the reason they're going up so much is basically because Uber decided to buy over $1.2 billion worth of cars from Lucid. So huge order, almost saved the company. Like, great news for Lucid because right now they're kind of struggling. You look at their net income right here, they're kind of burning a lot of money. Couple $100 million every quarter. It was nearly $1 billion that one quarter. So we really need to see Lucid get closer to net income positivity, and they're diluting you. So I'd still rather buy Tesla, but that's why this one's kind of popping up. I don't know if I'd enter this one at this price. I'm just gonna stay away from Lucid here. But that's great news. Uber bought 1.2 billion of cars from them, and also Nvidia is helping partner that. They're using Nvidia software for their cars. Here, you know what? Let me go look at Nvidia because I saw someone say that one earlier and I never got to it. So if we go to Nvidia, obviously all-time high on this company. Congrats if you own this one. Just a monster of a stock right here. But obviously they have GPUs, huge GPU market share, 20% PC GPU market share. But they have this automotive revenue from their software licensing out to car companies. So they have this automotive segment of revenue, which is pretty cool. But yeah, mainly it's from the data center business. And if we go to the net income, I mean, obviously they just print money. Nvidia is making literally 20 billion in net income a quarter, are going to be in the future. And it just keeps on growing, just keeps on hitting a new record every quarter. And another reason Nvidia is doing so good, they gapped up on this news that they're finally able to send their chips to China. So China is allowed to buy NVIDIA chips and AMD chips because that really helped out AMD. Wait, is it 1 minute, guys? Literally less than 60 seconds and the market will open. So we'll look at one more stock and then we'll go see how the market opens. Yo, improvement. Yes, sir. Good to see you, man. Hope you're doing good. Yeah, hope you're having a good Sunday, everyone. So let's see. BYD is the best EV company. So yeah, this is the Chinese. That's BYD Gaming. So this, I think, is the electric vehicle stock right here. What's the market cap? Yeah, 1.15 trillion. They're nearly worth exactly the same as Tesla. So BYD and Tesla are worth nearly the exact same in market cap. And here's what's funny. Warren Buffett and his Berkshire Hathaway team own this company. He decided to buy BYD over Tesla, which was weird. So look, reasonable valuation, obviously China stock, but the PE is a 23, pretty fair. And if we go to the net income down here, they're making actually a lot more net income than Tesla. They made 1.3 billion of net income just in the most recent quarter. And I think Tesla made like 300 million. So anyway, these are nice year-over-year growth rate numbers. They're kind of taking market share in China and Europe. Like, dude, we would all be driving Chinese cars if it weren't for the tariffs. I mean, they're good. They're good enough for the price. Like, it'd be like $12,000 for a pretty good car. What platform are you using right now? Hey, yeah, User25. This is actually a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But yeah, let's keep going here. Archer, Joby, I wouldn't buy either of those. Someone said, what do you mean the market opens? So yeah, at 8 p.m., the overnight market opens. So look at that. We just opened. We're going to need more time for volume to come in. We can't really see how the market's moving. But looks like the SPY is barely green right now. Let's go. So let's keep going here. What do you think about penny stocks? So I don't love penny stocks. I did just buy 3 of them though. If you want to see why, check out my most recent YouTube video. Oh, and I wanted to go over InnoData after this, but I just bought DCTH, TSSI, and GHM. These are all stocks that I'd consider penny stocks because they're all worth under $600 million each. And actually, if someone wants me to look at one of these, I will. But I want to look at INOD right here because I know a lot of people like this name right here. Oh, hey, thanks, Nick, for that right there for the BYD. Yeah, we'll look at TSSI after this. I got you. And yeah, Zim has the huge dividend. They have a rule where half the revenue they pay out in dividends. So here's InnoData right here. This is one of my favorite stocks, Scale AI competitor. Meta buying Scale AI is the best news for this company. But this company's main customers, by the way, their main contract customers are literally Google, Amazon, Nvidia, and Microsoft. So look at this, 87% of the revenue comes from their digital data solutions and incredible growth here. I mean, the revenue is up 157% year over year. This is the kind of company I want to own, one that's really high growthy. I mean, 150% revenue growth is incredible. And on top of that, they're finally net income positive. They've made money the past 3 quarters. I mean, they're super net income positive, no net debt. They're deleveraging. I made a couple videos about this stock as well. Make a free cash flow every quarter. So InnoData, I think, even though the stock is like been pretty hot, doing really good, I think they're just going to continue to be a winner. So yeah, that's one I do own in my Roth IRA. So another stock I own in my Roth IRA that kind of just mentions is ticker symbol TSSI. I think this one's just going to continue to go up as well. And the market cap is still really tiny. If you look in the top right, you see market cap. This whole company is worth $579 million. So, you know, that's a pretty small company. So $579 million company. And I want to show you my favorite things about this stock right here. So if we go to the financials right here, as you know, I love looking at the financials. Look at the revenue growth. Literally last year, the revenue was $15 million. Now it's $98 million, up 522% year over year. So this growth rate, incredible growth rate. Again, what's it going to be this time next year? Who knows? And they're making net income every quarter. So first off, you have a company that's only worth like $600 million, and they're making a couple million of after-tax net income every quarter, and the revenue's up 5x year over year. So I just love the growth here. The procurement revenue, look at this. It looks weird, but it's up from the 2023, 2024, it's up 200%. What happens is, yeah, hey, A5, this is a brokerage that I'm on right here. If you want to get the software I'm on, it's in the link tree in bio. First link there, it's free. So let's look at, Arista, or actually, let me look at this stock. What up? Edgar said FLL stock. Let's check it out. So Full House Resorts. So unfortunately, this stock is not done too good the past couple months here. Let's go check it out, though. A very small one, very, very small, $160 million company. So I don't love that. I'm guessing they just own a bunch of hotels. So $75 million of revenue. And look at that. They lose $10 million a quarter. That's actually really bad. So they lose $10 million a quarter and the whole company is worth $169 million. So they're losing close to like 5 to 8% of the company every quarter. They can't keep that up. Market increasing by 0.33% already. Swinging weeklies on Apple and Amazon. Yo, yeah, hey, we'll check out. What up, Potato? Yeah, we'll check out Amazon. I got you. So let's see. Hey, we're up 0.13%. Again, there's not too much volume right now, so we can't see. But looks like the QQQ is green. So congrats if you own stocks. Looks like next week's going to be pretty bullish. So let me look at Amazon for you. So this is one I actually own here in my Moomoo account. So Palantir on track for, yeah, we can look at Palantir as well. So yeah, check this out. Here's Amazon right here. We do own 12 shares of this stock. This is a Mag 7. I trust Amazon more than Google, man. Like they're so innovative. This is one you really just want to buy and hold forever. They don't have a burden of a dividend or anything. Like, so here's the thing I'll say. A lot of people know Amazon for like their online stores. And look at that. That's a lot of their revenue, 37%. But then they're really like way more than that. They're like an ETF in one, third-party seller services. And the AWS, Amazon Web Services, actually the most valuable part of Amazon. Who knew that? And look, it's over $100 billion of annual revenue for the full year 2024. And this is a record. So they're the number one cloud service provider. So they also advertising business, they own Twitch and Amazon Prime Video make ads and stuff like that. Subscription service, Amazon Prime. And really the best news, obviously we got to go look at the financials here, is the margin expansion. So the revenue is up 8% year over year, pretty good, 8% revenue growth, but the net income is up 65. I mean, look at that net income. It's 15, 20 billion a quarter. And if we go to the net margin right here, the net margin grew 51% to an 11. So increasing the margin, really good. So NVTS stock. Oh, then we'll look at Palantir. So we don't really need to look at this stock. Basically, there's nothing to look at here. Basically, this company was going to go bankrupt, and then they got saved by Nvidia. This company has a huge partnership with Nvidia. Before that, they were literally at all-time lows. So basically, you're really waiting to see what happens to the revenue, because right now the financials aren't too good. Revenue's down 40% year over year, lost 16 million. So I want to see what happens to the revenue after the Nvidia partnership. So all that huge gap up is the Nvidia news, and I'm curious to see what that'll do to their financials. So let's go look at Palantir right here. And then we'll look at realty income. Google might hit 200. Yes, sir, man. Google's been creeping up. I love it. So here's Palantir right here. Debt-free company, by the way. Absolutely no debt. But we do know the valuation's a bit nutty on Palantir, 600 PE. But here's why they might deserve an expensive valuation. I don't know about this expensive, but obviously half the revenue comes from the government. They have so many government contracts, and the government revenue is up 45% from the previous year. I mean, this is incredible growth, 45% year over year on the government revenue, and the commercial revenue with businesses, S&P 500 companies also at a record, up 33% year over year. So they're AI, they're government, they're contract. I mean, they're everything investors want. They're really growthy. They're no debt. Look at this fortress of a balance sheet. I mean, it's crazy. So anyway, I can see why people love that one. I don't know about the valuation though, but yeah, super growthy. Yo, Nafades, how's it going, dude? Happy Sunday, guys. Yeah, happy Sunday, everyone. Hey, Ghost, no way, dude. Ghost, thanks for all the roses there. I appreciate that, brother. Someone said what app is this? Yeah, this app is actually, it's a brokerage link tree in bio. First link there, it's called Moomoo. Dogecoin to the moon. What up, Daniel? So how do O financials look? So yeah, this is your monthly paying dividend stock. They're actually a REIT. They a triple net lease REIT. And if we look at the dividend, a 5.6% dividend yield. Basically, you don't look at net income for this company because since they're a real estate company, the net income doesn't add back the depreciation and the amortization. So you actually want to look at the CFO cash from operations, and they're making 700 to 900 million every quarter. And when we look at this as a payout ratio, they only have an 80% payout ratio. Again, this is a company that has to, by law, have a high payout ratio to avoid taxes since they're a REIT, but 5.6% dividend, and they're one of the few companies that pay you monthly. So if you buy the stock, you actually get paid 0.269 cents every month. So pretty cool. So GOOG, yeah, might hit $200 soon. I think they report earnings this week. Oops, let's see. They report July 23rd, and today's the 20th, right? So in a couple days, we actually get Google earnings. And look at that head and shoulders, kind of, if I zoom out here, kind of looks like a head and shoulders pattern. But let's go look at the financials here because, as you know, I love looking at the fundamentals of a company. Can we look at PayPal, Arista Networks? Yeah, we can check those out too. So are you a trader? No, I mainly just buy and hold like high quality stocks for the long run, companies I trust. I'll show you my portfolio after this as well. And actually, Google is a company that I very much trust as a high quality stock. So yeah, let me pull up the financials right here. Sorry. Oh shoot, my thing just disconnected. There we go. Sorry. All right. So look at here's Google. Here's the PE. The PE is really fair. The PE is just the net income multiple, but Google trades at 20 times PE. Seems very fair to me. And Google's really a margin growth story. I mean, they're kind of like an ETF in one. They own Android. They own YouTube, Google Cloud, Wiz. They're in Waymo, cybersecurity, quantum chips. So yeah, revenue's up 12%, but net income is up 45% year over year. So Google's growing their net margins like crazy. So I just love the growth on Google. Perfect buy and hold for the long run company. Don't really have to worry about Google. They also have a nice dividend, 0.5% yield there. I wanted to show the Google Cloud growth. I mean, and the PE is a 20, for a Mag 7 stock, a 20 PE. I mean, that's pretty fair. Yeah, the Google Cloud business is doing incredible. And that's just one segment of business. So what platform do you use to trade stocks? So this one right here, it should be in the link in the bio, or first link in the description here. It's in the link tree in bio, first link there if you want to get the software I'm on right here. It's actually a brokerage. But yeah, Google's a great one, buy and hold. Remember looking at Palantir at $8, but couldn't stomach investing in such a... Hey, yeah, Nick. I missed out on Palantir too. Is there a better monthly dividend company to own? To own And other than, oh, well, actually, here, if I go to my Robinhood account right here, this is my main dividend account. I do have another this is my only monthly paying dividend stock. Wow, they're up about 1%, but this is Main Street Capital, ticker symbol Main. They're another one of the companies that pay a monthly dividend. So Main Street Capital pays a monthly dividend, which is pretty cool. So they have like a 5% yield. So they've performed a little better than Realty Income. So someone's like, can we look at PayPal? So yeah, let's look at PayPal. Then we'll look at Roblox, Futu. What's your profit taking strategy? I don't really take too much profit on stocks unless I just don't believe in them anymore, or I just think they're really overvalued. But even if they're slightly overvalued, that isn't enough for me to always sell it. So anyway, here's PayPal right here. PayPal's down bad since 2021. A lot of stocks are, like DocuSign is, for example. And we can see the PE. So they're trading at this commodity multiple, like a 16 PE. They're like not really trading at a multiple where they're going to create you or lose you any value. So, but here's the thing right now, they're a buyback machine. Here's why the PE is probably low. Look at how the growth is kind of slowing. So revenue is up 1% year over year. So revenue's up 1% year over year. So it's just not big growth. And but the good news is they're making a boatload of net income, over $1 billion in net income a quarter. The free cash flow is a little better. But what's PayPal doing with all this net income? Well, they pretty much spend it all buying back their own stock. So they're a stock buyback machine. They're making free cash flow as well. So yeah. Roblox. So yeah, we can go to Kathy Wood's portfolio because she owns a lot of Roblox. If anyone knows who Kathy Wood is, she owns like the ARKK ETF. Yo, that one dude said thoughts on AMD. Yeah, hey, remind me to look at AMD because I do want to get to AMD. But here's Kathy Wood's portfolio. She owns Coinbase as her largest holding, and then Roblox. Dang, her largest holding used to be Tesla. Now it's only 7%. But anyway, let's look at Roblox right here. I know they've had some incredible stock price appreciation recently, and we'll check it out. So. Well, yeah, what up, Liam? Sorry, dude, my Wi-Fi is bugging today. This is weird. All right, so yeah, there we go. Roblox all-time high. I mean, or not all-time high, but new 52-week high on them. This is some incredible performance. And let's go look at their financials right here. So active users, I love this data we get. So daily active users is 97 million. So up 15%. So yeah, last year it was 77 million. Now it's 97 million. So incredible user metric data. And yeah, look at the FCF, which is free cash flow. 426 million of free cash flow, up 123%. I mean, that's really impressive. You know, they've more than doubled the free cash flow. But this company has a lot of stock-based comp. So when we go to the net income, they're still losing like 200 million in net income a quarter, but the trend is getting better. Basically, and they're leveraged. Yeah, I forgot about that. Not great balance sheet, but they've really beat expectations on the daily active users, the free cash flow, so much so where the stock is able to go up. So I don't know if I chase this one just because they're still, oh my gosh, they're still struggling with net income positivity, but I still like them. So here's a company that I did just recently buy. Oh, let's see how's this account doing? So up in the overnight market, AMD's up 0.5%. That's really good. Is anything down? Disney's down. Robinhood. Well, let's go look at AMD and we'll look at FUTU after this. So AMD, this is my chip play. I like doing analysis on this app right here. It's way better. So let's go look at AMD Dizzle. And there was my cost basis. My cost basis is right here at $124 a share. You know, I remember everyone was calling this advanced money destroyer. Now it's like advanced money duplicator. So anyway, let's go look at the stats right here. So huge GPU market share right now. Obviously, they sell GPUs, 17% PC GPU market share. But the main thing I like about them is actually the data center. So if we go to the data center revenue, because they make their own GPUs, you know, they're like in the best position to be in the data center business because they supply their own GPUs, kind of like Nvidia. So the data center revenue is up 57% year over year. So very impressive data center growth. And if we go to all these metrics here, free cash flow up 100% year over year. They're printing free cash flow. They're making a boatload of net income, 700 mil the most recent quarter, and they have no net debt. I mean, look at this balance sheet. I mean, that's impressive. Why so many stocks in your portfolio? Yeah, I probably have too many stocks. I do agree. But I heard this saying like, if you're over diversification, it's diversification. Basically, all three of my portfolios have individually outperformed the market, so that's good. Hey, hey, SFG. If you want to get this app, it's in the link tree in my bio right here. The first link there. It's actually a brokerage. This thing I'm on right here. If you want to get it, yeah. So let's see here. Yeah, there he goes. Someone said JEPI in 5 years. JEPI has only gone up 5. Yeah, JEPI. They're not going to outperform the market because this is a covered call ETF. It literally sells calls on the market. So obviously, when your strategy is selling calls, you're not going to outperform. But with JEPI, what you do get is a lot of monthly dividend income. So yeah, as we can see, JEPI is not too close to all-time highs, but you get a monthly dividend with this stock right here. So yeah, that's the kind of cool part. But you buy that to maximize your dividend income. Yes, sir. All right, let's see. MVST. If you're not huge on stocks, what's your main? Let's see. MVST. So yeah, Microvast. I think that's what this is. MVST. Now, this company has been doing impressive because they're just beating every metric that analysts ever expected. So right here, this company was honestly priced for bankruptcy. It was 50 or 20 cents. So like, look at the chart before this huge rally. So anyway, let me show you what happened. So basically, the stock was priced for bankruptcy. It was a 20-cent stock. And let me go look at the financials here. SEHD is safer. Yeah, SEHD has a nice 4% dividend there. I thought I liked them as well. Probably safer than a covered call ETF. So there we go. Dude, my phone keeps disconnecting. But yeah, look at this right here. If we go to the orange line, this is what the orange line is what the analysts were expecting. And you can see the blue line, they keep beating like crazy on the revenue, but mainly it's the EPS. So this company was expected to lose $2 or 2 cents of EPS. So basically they were expected to lose net income. Well, then they came out and made a boatload of net income and they made 20 cents of EPS, and that was real. They beat like crazy on the EBIT. They were expected to lose EBITDA, but they made 18 million. So they beat analyst expectations like crazy. And look at this growth. Revenue's up 43% year over year. Very great growth. Revenue's up 43, and they made net income on that. And that wasn't like a one-time adjustment. They actually made net income. So that was great news. So that's why. All right. Haven't found any good monthly dividend one. Hey, Main Street Capital. That one's seen some really good stock price appreciation, MAIN. So any stock you're buying this week, I might buy a little bit of Google before earnings for fun. But my 3 most recent purchases, I did these all last week in my Roth IRA, TSSI, DCTH, and GHM. Let's see how the market, we're up 0.14% right now. Let me go check the S&P. Oops. Let me remove this from the watch list. Yeah, Nvidia's up. Tesla's up 1.6. Tesla reports earnings in 3 days. It's like Microsoft's down slightly. So yeah, overall pretty good green right now. So we'll probably open green tomorrow. Oh, NVO stock. Yeah, hey, this is the company that owns Ozempic. So this is a very cool prescription company. So let's see. Yeah, hey, what up, BJ? So here's Novo Nordisk. This is the company that owns Ozempic. If anyone's heard of that like weight loss prescription, Ozempic, well, this is the company that owns it. So if we go to where the revenue comes from, 95% of it is their obesity care products. And look at the PE. I mean, it's really low, 17 PE on this company. And it might be because their Ozempic patent expires in a couple years. But for right now, the metrics are incredible. I mean, look at this net income. I mean, they're making billions every quarter, 4 billion the most recent quarter, and you get a nice 2.5% dividend. So for right now, I think the risk reward is really good on NVO, especially at 6. Wait, did they do a reverse split? Or I don't think so, but $64 a share. Yeah, that one looks good here. What are your thoughts on Rivian? So yeah, dude, Rivian, I like that Amazon's a shareholder. So if Rivian does good, the biggest beneficiary is actually Amazon. So yeah, we go to shareholders right here. Check this out. The largest shareholder is Amazon.com or just Amazon stock. The only thing that makes me not want to buy this company individually is just the fact that they are losing a lot of net income and they're diluting the shareholder a bunch. Like, look at this. They lost. I mean, the trend's getting better. And that's the best part, that the trend's getting better. They need to keep up this trend, but they lost $500 million just in the most recent quarter, which is better than losing $1.5 billion the last year. So yeah, I do like their cars. I think a lot of people like the Rivian trucks. And anyone seen those like electric Amazon Rivian delivery trucks? They're really cool looking. Um, let's see here. So yeah, that's the one I like. Oh, and let's look at Uber too. Yo, what up, Susimo? Probably saying your name wrong, but Tesla looks promising. Dude, Tesla reports earnings this week, so guess we'll wait to see what the financials come out. I think a lot of people are wanting to see what Tesla earnings are. So here's Uber Technologies. Man, I love Uber. Great company, and they just bought a bunch of Lucid cars. Did anyone hear that partnership? Like Lucid and Neuro AI. Uber bought $1.2 billion worth of cars from Lucid. And that's kind of why I think the stock didn't go up on that news, because they're spending a lot of money. But here's why Uber can easily afford that. If we go to the free cash flow just in the most recent quarter, it was 2.25 billion. So incredible amount of free cash flow. So they can basically pay that off with half a quarter of free cash flow. But I love Uber because they're still growing. I mean, if we look at their mobility revenue right here, I mean, it's at a record, up double digits, up 16% year over year. Same with the delivery revenue, which is Uber Eats. That's up 17% year over year. So I love the double-digit growth on Uber. Everything's at a record. Look at the free cash flow is ridiculous, making billions of free cash flow. They're making net income every quarter. They're deleveraging like crazy year over year. So everything about Uber is just incredible. Everything's trending in the right direction over there right now. So LVMH stock. Whoa, what? That's LVMUY is the ticker symbol. So this is Louis Vuitton, Moet Hennessy, Dior, a lot of brands, and I like this one more than a Nike. So hey, Jeremiah, if you want to get this app I'm on right here, it should be in the link in the description. It's actually a brokerage, but it's in the link tree in my bio there, the very first link if you want to get it. But it should be in the description too. It's a brokerage. But anyway, here's LVMH stock, Louis Vuitton. So this is the company that owns Louis Vuitton, and as you can see, they have not been doing good. And I like this one as a better buy than Nike. The PE is very low. I'm trading at an 18 PE. Historically, that's like the cheapest valuation it's traded in a long time. And I love how diversified the revenue streams are. It's not just Nike as a brand. They're in watches and jewelry. They're in perfumes and cosmetics. They're in drinks. I love how diversified the revenue streams are. And if we go to the net income right here for the full year 2024, they made 13 billion of after-tax net income, but it did fall 23% year over year. So that might be why the stock is kind of falling. The PE is going down because they're not growing anymore. It's a tough environment for like luxury products, but yeah, I like that one more than just like buying a Nike individually right here. So TMDX, I think this is okay, TransMedics. So I actually really like the financials of this one, I believe. And they're a very small company, a $3.7 billion company. They might be the liver therapy company or so look at this. Liver revenue is 75% of the business. And look at the growth. I mean, this is what you want to see for a company. It's up 63% year over year, literally to a new, like, look at the trend of the revenue. It's at a literal record. So the liver revenue is just going nuts. Same with the heart revenue. Let's see how that's doing. Yeah, the heart revenue is up 30% year over year. So both segments of business are growing like crazy. Most all the revenue comes from the U.S. and their net income positive, up made 25 million. So actually, the financials are very strong here. Yeah, Google has no, Google does not own Venmo. I think you mean Waymo. Google owns Waymo. Yeah, dude. PayPal owns Venmo actually. But yeah, anyway, whoa, revenue's up 50% year over year after being up 130% last year. They're deleveraging their balance sheet. So TMDX is one I actually really like. Can you show your portfolio so I can compare if I'm an idiot? Well, hey, also, I have multiple portfolios here. If you want to see all the stocks I own, check out my YouTube channel. Hey, the best way to support me, by the way, is just go subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. And I just appreciate if you watch the stream from YouTube. I'm scared what's going to happen to my TikTok account. It keeps going down. Do you know what's going on with Pinterest overnight? I do not, but you know what? I'll check it out very quickly. If I go to Robinhood and type in PINS, hopefully this will, we can pull this up fairly quickly. This is why I hate Robinhood. We got to go back to the other app. This is just not going to work. Okay, here we go. Pinterest up 2.7%. So hey, pretty nice. Yeah, Pinterest, I don't know about that one, but debt free on that company. All right. We can't analyze that stock. Robinhood shares. Yeah, man, I do own some Robinhood. It's actually my best performing stock. Out of any stock I own, I'm up the most in terms of percentage change on this stock right here. Yeah, all good improvement. Yeah, dude. Google's like an ETF in one. So here's Robinhood stock right here. I mean, they're so innovative. And check this out. We can see their net cumulative funded accounts, 25.8 million. But here's the best part. The revenue is just so growthy. Revenue's up 50% year over year, and they're making net income. Like, this is the best part. People are seriously starting to take Robinhood serious. They're making hundreds of millions in net income every quarter. When if you zoom out to last year, look at this. They were losing a couple hundred million a quarter. So they've really turned around the business. And I'll show, I just like being transparent. I'll show you. Yeah, because I guess I got nothing to hide here because it looks really good. But we're up 687% on Robinhood. I do think the valuation's a bit nutty. I wouldn't buy them right here. But yeah, a lot of the fintechs, like a SoFi, we're up 260% on SoFi. They've been crushing it. A Dave, another fintech, 180% on Dave. And Food2, we're up 50%. And these are great. So someone said SYM, Symbotic. So this is oh, yeah, well, look at GENI. Yeah, Robin the Hood. So Symbiotic right here, this is my favorite robotics company. This is actually a warehouse robotics stock. My second favorite robotics stock. My favorite's going to be Amazon as a robotics play. But if you're looking for a pure robotics play, Symbiotic would probably be one of my top picks. And if we go to the largest shareholder, they work so much with Walmart in their warehouse logistics that Walmart took a stake. Walmart owns 13% of this stock right here, which is pretty cool. But look at the revenue growth. I mean, this is huge. Revenue's up 40% year over year. Huge revenue, 550 million, and they're super close to getting net income positive. So trend is getting way better. Let's see. Check out Genie, GENI. Let's check it out. So Genius Sports. Hey, look at that. I mean, they fell down bad, but ever since then, the stock has kind of been straight up. What's the market cap? So yeah, a small one, $2.7 billion company. But let's so I can't say what they do, but really good balance sheet, man. Look at that. They're deleveraging while assets are growing. Revenues up 21%, growing double digits. They're super close to net income positivity as well. So they're kind of like a DKNG. So let's see. Check SE net income growth. It says 1,000%. Is that a glitch? Well, yeah, I'll check out the stock. So, should I sell Purple? Is that Purple Mattress? What's the ticker symbol for that company again? They're a very small one. So here's C, and the app is telling me that there's a bullish flag, and the rise probability is a 78% chance. Well, we like looking at technical analysis and the fundamentals. So someone said the revenue growth says 1,000%. Yeah, that's right. So that's because the net income was negative. So that's kind of what you're comparing it to. So this time last year, the net income was negative 23 million. Now it's 410 million. So yeah, that's incredible net income growth. I mean, 400 million the most recent quarter, and that was real. That wasn't like some one-time adjustment. They really made 400 mil. Revenue's up 30%. This is an e-commerce play, e-commerce site. If anyone's heard of C before, let's see how that's doing. Wow. Look, I mean, you can't make it up. I mean, it's up 30% year over year to a new record. So yeah, e-commerce play, they kind of deserve the high PE, the high growth. Whatever. Yeah, hey, Chase the Bag. This is a brokerage right here. If you want to get this one I'm on right here, it should be in the link in the description. It's also in the link tree in my bio there, the very first link. It's a brokerage called Moomoo. But yeah. So let's keep going here. Thoughts on CoreWeave? Yeah, so if we go to NVIDIA's holdings, because we can see NVIDIA's stocks that they own, and here are all the stocks that NVIDIA owns. Their main holding is actually CoreWeave. So NVIDIA was buying the dip on this stock at like the $40 level. Yeah, hey, Michael, if you want to get this app I'm on, it's a brokerage, link tree in bio, first link there. It's free. But here's CoreWeave right here. They just bought Cores. It was like a Bitcoin mining company. It's called CoreZ. They just bought the CoreWeave bought CoreZ. So anyway, let's go check this out right here. Again, they just IPO'd, so there's not too much revenue. history here. But look, the one thing we do have is we can see the revenue's up 420%. This is such a growthy company. Revenue went from 188 million to 980 million just the most recent quarter. So, I mean, that's incredible revenue growth. They did lose a lot of net income, but I think people just love the high growth on CoreWeave. So you know what? We'll check out this stock. What was it? IXHL. So I think we've looked at this one. It's just a very small market cap. But let's go check it out because I don't remember. Did you know that I drank 3 Capri Suns and told my mom I'm invincible? Hey, what up, Melted? Yo, Capri Suns is owned by Kraft Heinz, ticker symbol KHC. So yeah, this is a company we don't talk about these kind of stocks on the channel. I do apologize here, but yeah, $57 million company, stocks at all-time lows. I mean, we just don't really cover those kind of stocks. But hey, good luck on those. Maybe that could be a fun swing trade or something, but not one we really like to cover. So someone said Opendoor. This is another really momentum-y name right now. And I don't think there was any like real news here besides one person. He says an activist said this is a 100x stock in a low interest rate environment. So basically this is Opendoor. You buy houses online or you can like enter the houses. But basically the housing market's stuck with the high interest rate environment and it led to sales collapsing. Like look at this. They used to make 4 billion of revenue a quarter. And look, it just fell. And now it's only $1 billion. So the low interest rate environment will really help out the company, but there's some real bankruptcy risk. They're losing 100 million a quarter. And before today, the market cap was way lower. So they're losing 100 mil a quarter and they're a $1.6 billion company. So they're losing 1/16 of the market cap every quarter. Yeah, someone said SRPT, 3 patients RAP. So yeah. Oh, it's not going to load. You know what? Look, here's why I hate Weeble. Look, it does not load my watch list. And I figured this out on accident. It doesn't load your watch list unless you turn your phone to the side and then reconfigure it around this way. So I'm not going to. And then it just, okay. Anyway, if we go to this stock right here, SRPT, this is at the bottom of the watch list. So SRPT, if you're wondering what happened to this stock, they have this product and it basically RAP'd a bunch of people or 3 people. And so basically the stuff probably doesn't work. So basically the stock's at an all-time low. So, but here's the thing, they're a $1.3 billion company. Look, and the revenue growth has been nuts. It grew 81% year over year. So incredible revenue growth. But anyway, SRPT, I'm probably just going to go lower. ISRG. Yeah, we haven't looked at this one today. This guy sold me, gaming bot. That's, what's up, dude? We'll look at GCTK. Yo, what up, Jeff Mack? Is there a ticker symbol C? I guess we'll find out. So here's Intuitive Surgical. This is a great medical device company. And look, hold on. They report earnings on the 22nd. So in 2 days, they report earnings on my dentist appointment day. So yeah, instruments and accessories. Look at the revenue growth. It's up double digits, up 20% year over year. But the best part is really the bottom line here. This is the net income they're making every quarter, after-tax net income. It's literally $700 million a quarter, and it keeps on growing. I mean, it's up 30% year over year. I mean, just incredible. It's interesting, however, most stock like Tesla didn't go up at the beginning of the market. So ISRG, I love the net. And look at this fortress of a balance sheet, dude. Jeez, no net debt or no debt at all, I think, on this company, making tons of net income. The valuation's a little high, but that's a company that probably deserves the high valuation. So let's see. What up? NASCAR said GCTK. This might be a really small one. So yeah, oh my gosh. Look in the top right. You don't see these much, but you see the market cap? This whole company, the whole valuation of this company is $3 million. So you could buy this company at a $3 million valuation, and they lost $6 million just this quarter. So this is not a kind of stock that we cover. So you buy the whole company for $3 million, you buy a company that loses $6 million a quarter. So all right. Ticker symbol C. Is this like Citibank or Citigroup? So yeah, check that out. All-time high. This is a bank, I believe. So look at that. They're at an all-time high. A lot of the banks are doing really good. After all the stress tests from the feds just ended at the banks, they're all in great positions. There used to be a lot of bank fear, like the Silicon Valley Valley Bank collapse. But anyway, these banks usually have nice dividends. So check this out. You get a 2.5% dividend, and the payout ratio is only at 36%. So they still have room to raise the dividend. Price to books at 0.87. What's the PE? Even though you don't really look at that for banks, it's a 13, right in line with the industry average. So yeah, markets, United States personal bank, services. I love how diversified that they are. Wealth management, banking, all others. So yeah, let's see. Half the revenue comes from the U.S. and then outside the U.S. So if we go to the net income, yeah, look at that. Wow, 4 billion the most recent quarter. So they're making billions every quarter. Yeah, nice financial stock. Can you look at software where the the GTA 6 stock. So yeah, they're do you think Google's undervalued? Yo, Ethan, I do think so. I do own Google. But this is Take Two. Yeah, this is the company that owns Rockstar Games. So yeah, this company owns GTA 5, Red Dead Redemption, and as you know, GTA 6 is about to come out. They're in such a unique position. They have this game, like they have this asset that as soon as they release this game, it's literally going to bring in billions to the company. I mean, GTA 6 is probably going to cost a lot, and I see people like, I'm a grown man. I could pay $300 for a game. I don't care. So Take Two, they're in such a unique position where this game they're about to release that they haven't released yet is going to bring in so much future growth. So they're kind of pre-pricing that in right now. I think they own some other games as well, like The Sims. So yeah. Oh, yo, we can look at a Grab. I can. Yo, someone said they can buy the whole company. I heard Jeff Mack. That's funny. Do you think water stock will go up in the future since fresh water will delete over time? So I've heard that right now. I think we're good on water, but I have heard like data centers. Every time you do like a ChatGPT search, it uses like a bottle of water. Uh, so it is interesting to see what the future will be like. But let's look at Grab Holdings right here. Yeah, what up, STGX or Farland? So this right here is Grab Holdings. I love this company right here, and that's because of Uber. So if we go to the largest shareholder is now Uber Technologies. So 13% of the business is owned by Uber, and then Toyota Motor owns 5.5%. So a lot of big companies are buying this stock. No net debt on this company. But what does Grab do? What are they? Well, they basically do exactly what Uber does. They're an Uber clone, but they're in all these other countries where Uber isn't. Like, check this out. I mean, Indonesia, Singapore. Notice the US and Canada isn't on here. So it was genius by Uber. Instantly gives them international diversification. So and they're printing free cash flow every quarter and net income. So I think about and Uber spent literally half a billion of like half a quarter of free cash flow to do that. So check QQQ Ultra Short ETF. Yo, what up? Corporatism. What's the ticker symbol for that one? QQQ Ultra. Oh, you're talking about SQQ. So yeah, look at this. So basically, this is an ETF leveraged. Very careful. Whenever the market goes up, this goes down. And so it's like the inverse. So if you buy this ETF right here, right now, which is at all-time lows, this should always just continue to hit all-time lows if the market goes up. But it's a short-term bet to kind of hope that if you think the market's going to go down, the QQ is going to go down, you buy that ETF, just buy shares of that instead of buying like a call op or a put or something. Let's see how the market's doing really quickly. Hey, we're up 0.16%. Look at that. Meta's up 0.35. Google's up 0.5. Let me see the QQQs. Yeah, the Tesla's up 1. QQQ's up 0.15. So yeah, market's pretty green right now. Let's go. Yo, I haven't seen this stock in a long time. Yeah, hey, Netflix reported earnings on Friday. Incredible earnings, but still a 50 PE on Netflix. We might check them out later, but let's see. CELH. So yeah, Celsius right here. They just bought Alani. If anyone's heard of Alani before, it's like an energy drink, and I just bought a lot of those for fun for me and my brother. So Celsius right here, they kind of lost their growth back here. So if you look at the stock, if you're wondering what happened, how did it go from 92 all the way down to $25, like an 80% decline? Well, this is basically what happened. they were such a high PE stock, growing like crazy, but then the revenue went negative. Sales are down 7.5% year over year. Net income even went negative, and no one really expected that. But things are starting to look a lot better now. They made 45 mil the most recent quarter. They just acquired Alani, which is going to bring even more growth. They have a really good balance sheet to be able to afford that. Pretty much no net debt. Yeah, no net debt on this company. So yeah, Celsius has really turned things around. We got to see we're seeing the growth come back, which is great news. So thoughts on potential large crash over the next 5 years? NVU Gaming, you got here. What do you think about buying silver, Doge, and wire real estate? Yeah, hey, those are like silver's precious metal, Doge, crypto asset. I'm just gonna start with safe stocks. Yeah, hey, gaming bod. This is my favorite stocks. First off, buy the S&P 500. Not a financial advisor, but I love the S&P 500. Then buy some individual companies that love, and trust that you use daily. Like I use Google, Meta, McDonald's, Constellation Energy. We have a utility bill through them. Amazon, Coca-Cola. I mean, just invest in what you know. That's kind of what I'm doing. And DocuSign. I saw one. So anyway. Actually, I wouldn't buy DocuSign. So, all right, let's keep going here. Barella, how's it going, brother? He said MDB stock. Is that MongoDB? Let's check him out. So, yeah, hope y'all are having a good Sunday, by the way. If y'all want to hit the follow button, we do this same stream every single Sunday. We're going to be live for at least another hour, so I appreciate y'all being here. So, here's MongoDB. Let's check out the financials here. So, yeah, they have the subscription business, other subscription. But let's see, MongoDB, their main source of revenue, it's up 26% year over year, literally to a new record. I mean, notice this revenue. I mean, this is what you want to see for a company. This is for the fiscal year 2025. It's at a record, up 27% year over year. So the business just hits a new record every quarter. The free cash flow was 100 mil this quarter. What about net income? So they're getting super close to net income positivity. They used to lose like a lot of money, but the trend is getting better. The year-over-year growth rates are really good. And look how they've deleveraged. Whoa. They've really deleveraged since the previous year. This is crazy. Someone said the market is closed. No, the market's open. The market is open. See, most people, it's 8 p.m. on a Sunday and the market's open because we get the overnight market thanks to Robinhood. I mean, look at this. Like if I wanted to, I could sell all my shares of Google right now or I could buy a bunch of Meta. So same with, I haven't even checked out this account. Hold on. Let's see how we're doing in the overnight market. So we just scroll over here. Yes, Sprouts Farmers Market, it's up 2.6. Food 2's up 0.9. Toast, what's down on the day right now? Progressive is down. Reddit, Hood. Someone said, can we look at Disney? Yeah, I forgot to look at them. So Disney, I've been taking a little bit of profits on them. Yeah, I put in the sell order up here just because I kind of bought the dip at a perfect time on this one. But dude, Disney's really bringing their streaming service. Their streaming service is really getting profitable. They also are opening a new park in Abu Dhabi. But anyway, this free cash flow growth has been the real winner. It grew 84% from the previous year. I mean, just incredible growth of the free cash flow. And the dividend costs nothing. What's the yield? A 0.8% yield on this company. Again, it's boring. It probably isn't going to outperform the market in the long run, but they've really gotten their streaming service really profitable. Disney owns Hulu, they own ESPN, Disney Plus, obviously, and they're starting to, and they just rose prices. They did the password crackdown, just like Netflix did, and the profits on the streaming business has really blown away the expectations. So you really should have bought Rocket Lab when I told you. Yeah, man. Jay said the UNH dip. Yeah, well, look at UNH too. Rocket Lab, this is a great company. Yeah, I did not buy them, but and I wouldn't really buy them here at probably over $50, but they deserve to be doing this good. This is such a growthy company. It's my favorite space stock. I wouldn't buy ASTS, Space Mobile. I wouldn't buy Lunar. I'd buy Rocket Lab. We go to their space systems revenue growth right here. I mean, as you know, I like looking at the financials so we can actually understand what they do, how are they growing. And look, their space systems revenue is up 45% year over year. On top of that, Rocket Lab has a $1.5 billion backlog of orders they haven't fulfilled yet. And they just acquired a company for $600 million that's going to bring even more growth to them. What platform do you trade on? Yeah, hey, Sand. This is a brokerage right here. If you want to get this app, I'm on. It's in the link tree in bio. Very first link there. Yo, Silver. Wait, hold on. Or Cipher Nando. Sorry if I'm saying your name wrong. But thank you so much for the gift there, the rose. Yeah, the cat. I really appreciate that. So. Yeah, and two more. No way, dude. I really appreciate that. Kevin said, show your portfolio. Yeah, go to my YouTube channel, Nathan Robert, Linktree in bio. I do stock portfolio updates all the time. And I just made some TikToks about what stock now. So someone said, can we look at Path? Yeah, dude, that's my biggest loser. I love being fully transparent. Here, look, all time. If you look in the top left, all time in here, we're only up 15%. So we've definitely underperformed the market. And this has been one of my bigger losers, UiPath. Basically, this day right here, if you're wondering what happened on this day, basically the CEO quit out of nowhere. It looked really bad, left management for dead. It was a terrible look. But here's why I can't sell this company. And I wouldn't buy this one either. I'm not buying more, but very slow growth, single digit growth now. But here's the best part. The whole company, remember, the whole company's worth 6.7 billion, and this company has 1.56 billion in cash. If we go to the debt, it says zero because they have no debt. So 1.5 billion in cash, no debt, and that $1.5 billion in cash is after they spent $200 million buying back their own stock. So they spent $200 million the most recent quarter buying back their own stock, $200 million the quarter before. So shareholder-friendly company, buying back their own stock, no debt, lots of cash, but slow growth, no mo, really been taken over by like a Palantir, Salesforce. So it's tough, man. To be fair, everything went up in the last 3 months. Yeah, everyone's a genius. Rising tide lifts all boats. So yeah, someone said UNH right here. So United Health, does the risk reward look good here? I actually think it does. I think it's worth a nibble here, not a full size position, but I think it's worth a nibble, maybe of a quarter size position in this stock because basically this company's being priced in like the net income's about to collapse like 50%, and I don't really think it's going to do that. So if you look at the PE, it's an 11, historically super cheap for United Health. That's because if they get accused of fraud, they will get kicked out of Medicare and Medicaid for 5 years. It would be devastating to their earnings. But check this out right here. If we look at their OptumRx business, we actually use that. We're a customer. We use OptumRx. And look at the growth here. I mean, this might be why the government's not too happy with them, but incredible growth here. $133 billion of annual revenue. United Healthcare is $300 billion of annual revenue. And you get a nice yield here, So even if you buy shares of this one, you get a 3% cash return every year in dividends. So I do think that one's worth a nibble here, but I wouldn't be shocked to maybe see that one fall another 10 or something. Veritone going to be, hey, yo, ERM, what's the ticker symbol for that stock? I'd like to check that one out. Gaming keep 10%. Hey, yeah, y'all are cool. Thanks for giving gaming advice. Yeah. So BROS, Dutch Bros stock. So let's check this one out. So Dutch Bros, this is like a Starbucks competitor. If anyone's been to a Dutch Bros before, I've been there just one time. It was pretty good. But check this out. We can see their company-operated shops, and this is why I do like them. It's up 31% year over year. So, for a restaurant in this environment, a lot of restaurants are struggling. This is some very good growth, very solid growth, up 32% year over year on Dutch Bros. And look at the free cash flow. The year over year growth rates are way better, up 46%, and they're making net income every quarter. So Dutch Bros is a net income positive company making a bunch of net income every quarter. There's also another company that's barely just making net income is Shake Shack. Anyone heard of Shake Shack? Like the burger place. They're barely making any money. Like if you go to the net income, they're making a couple million a quarter if you average it out there. That's another one, SHAK. Never been, but a coffee shop sounds good. Hey, Starbucks is struggling. Should we look at Starbucks? I don't have a channel like you. My account's way bigger than yours. I've only invested for 3 years. German. He doesn't like my choice of stocks. That's not good. But what's up, dude? Good to see you. Hope you're having a good Sunday, everyone. So VERI. Oh, let's check it out. So Veritone stock. Yeah. No way I'm touching healthcare. Yeah, I get that. I use IG. Hey, I don't have it. Watch out for people impersonating me. By the way, guys, I'll never follow you, DM you. I don't have a course, a book, a Discord. I literally have nothing. I'm just on here to give my opinion. Best way to support me is just subscribe to the YouTube channel. I stream every day we stream every Sunday at this exact same time. So someone said he bought VERI stock right here. So unfortunately, if we look at this stock on the weekly, apparently it only wants to load on the weekly. Very small company, stocks at all-time lows. They're only a $120 million company. So first off, I don't like investing in these kind of stocks. $100 million revenue. So they get licensing revenue. How's that doing? So 5 mil a revenue. Let's see. So revenue down 7% year over year, and net income they're losing 20 mil a quarter. Very leveraged balance sheet. They did make net income last quarter, but that was fake. That was a one time. That was a little gap net income trick. So they actually lost 20 mil last quarter. Did they sell an asset? Yeah. So look at that. That's okay. Anyway, I'd be careful with VERI. Um, that one looks. Hey, yeah. Thanks, German. I appreciate you, man. Yeah, hey, so this right here is my buy and hold portfolio. Once I buy a stock in here, I try not to ever sell it. Here's how we're doing, by the way. And, if you're going to be an individual stock picker, you want to make sure you're outperforming. And I don't mean this to brag, but if we go to the all-time in here, just in this portfolio, we're up 29% year to date. And I want to pull up the all-time. So yeah, we're up 29% year to date, and all-time in here. Fill a load. Well, I'm going to show you that. Oh, well, look at Shopify and Salesforce. Yeah, we're up 81%. And this app is cool. It tracks, if I were to just, look, here's every time I've ever deposited. If I were to just invest it all in the S&P 500 every time I made a deposit, I'd be up 50%, but we're up 81%, which is pretty cool. Then we also have, of course, this is our risk on portfolio. We got a lot of risky names in here, but a lot of high growth names that I trust their financials in. But yeah, wait, I wanted to look at Shopify real quick. So this is a great e-commerce play. Also, Kathy Wood owns this company. So we go to Kathy Wood's portfolio right here. A lot of people don't like her. I get that. But she owns a lot of Shopify stock. And this one's been crushing it. It's my favorite Canadian company right here. Check this out. This is what I look for if I'm going to hold a stock forever. This is one I'd hold forever. Look at this annual revenue growth. I mean, this is impressive. I mean, in 2019, it was 1.5 billion. Now for the full year of 2024, it was 8.88 billion. I mean, just incredible growth, and not just sales, but also, FCF, which stands for free cash flow. They're making a couple $100 million of free cash flow a quarter. The net income's also really good as well. They're making a couple $100 million in net income as well. So anyway, I do really like Shopify. Is a great just buy and hold for the long run kind of stock. Kathy Wood does own it. Hey, just because Kathy Wood owns something doesn't mean I'd buy it. So, all right. So let's see. Google. Yeah. Hey, GUE. I love Google. We just looked at them. So give me a minute and we'll check them out again. So, what are your picks? And yeah, here are everything I own in this account right here. So let's see right here. AVGO. Yeah, what up, GIO? So AVGO. So this is Broadcom right here, an Nvidia competitor right here, and they deserve to be at all-time highs. I mean, look at this stock. They're going to be a mag. They're worth more than Tesla. Did you know Broadcom's literally bigger than Tesla? And they're a Mag 7. But yeah, look in the top right, $1.33 trillion company. So absolute monster of a market cap. And a lot of people know Broadcom for their semiconductor solutions, which is half their revenue, or more than half. But they've really been growing because of their infrastructure software. Now, this has seen immense growth. It used to be, $2 billion a quarter, $1.9 billion, and now it's just exploded up to $6.6 billion the most recent quarter. And that's done wonders to the free cash flow. I mean, the free cash flow is up 44%, $6.4 billion of free cash flow just in the most recent quarter. So I love Broadcom, and you get the nice dividend. You don't really get a dividend with Nvidia. I buy more for the long term, minimum 10 years. Yeah, hey, thanks. What's up, Richard? Multiple times. Just wanted to say salute the grind. Hey, yo, Jay, thank you so much, dude. Yeah, I really appreciate that, man. Yeah, we try to go live every day. We just look at stocks and stuff. So someone said, where was this stock? I need your help. Look at Nucor, NUE. So I don't remember what this company does. Are they like a nuclear plant? They're on my watch list. So, and I traded them at one point. So I don't remember that. Let's go look at the financials here. So they're a $32 billion company. There must be energy related. Let's go see. So, oh no. So steel mills, raw materials, and steel products. So this is a steel play. And let's see. Actually, this one, Trump wants to bring, or the tariffs are really going to help the U.S. steel industry. But Look at this. The net income has kind of collapsed. That might be why the stock was struggling before today. If we look at the net income, it fell 76% year over year. Look at that. They used to make over like a billion a quarter. Now it's only 200 mil. So we want to see the margins kind of come back, but still they're very net income positive. Still 200 million this quarter is a very solid amount. But yeah, this is a steel play, a commodity. You probably won't, you're not going to probably outperform the market owning just a steel stock in the long run. But that's interesting if you want exposure to steel. So, yeah, she has made a lot of sus trades, but in ARK, yeah, ARK is really underperformed. Um, oh, hey, we can look at SoFi too. Yeah, man, SoFi, this is such a growthy company that deserves to be at a new 52-week high. Bog said what happens is, hey, this is a brokerage right here. It's in the link tree in bio. First link if you want to get this app. I'm on broker. But anyway, I'll show you my SoFi position. So SoFi, another fintech. I have 24 shares of this one. I regret every share I've ever sold of SoFi, but I do own this one. I have been owning SoFi for a long time. I bought my SoFi. I think it was this day right here, these 2 days. But anyway, here's what I love about SoFi. Here's why they deserve to be doing good. They have their own banking charter. They're a fintech, and look, their financial services make up 40% of the revenue. And look at the growth here. I mean, this is why I think they deserve to be doing so good. They're such a growthy company. The financial services has literally doubled, up 101% year over year to a new record. I mean, that's incredible. If you go to it on an annual basis, I mean, look at this. In 2020, the financial services revenue was 11 million for the full year. Now it's literally just in the most recent quarter, 300 million. So anyway, super growthy. And if we go to the net income, SoFi's making net income every quarter. Not much of it, but that doesn't matter. The fact that they're net income positive every quarter is great news because no one used to take them serious. They used to lose net income every quarter. So SoFi's one I do really like. Um, let's see. Hey bro, how about LNTH? I haven't heard of that one before. Yeah, well look at GE Veranova. That's ever since the spinoff, they've been killing it. Wait, where was it? LNTH stock. So I've never heard of this company before, but they're a big one, a $4.9 billion market cap. They have been struggling recently though, like they gapped down on earnings. So we'll go look at their earnings. There must have been something investors didn't like. So looks like they sell a bunch of prescriptions right here. So look at that Pylarify. Let's see how that's doing. So it didn't grow. The revenue actually fell 0.5% year over year. What about the next one, Definity? And Definity, whatever this is, grew only 3.5%. So I think investors might have been disappointed with the slowing growth. Like, yeah, revenue's only up 0.7% year over year. They are very net income positive, though, making a lot of net income every quarter. Yeah, hey, not bad. So I think investors aren't just happy with the slowing growth. So yeah, I want to see the growth come back. Do you make an active trader long? Yeah, mainly. If anything, I swing trade. Like I'll buy a company, hold it for at least a week, and then sell it after. Uh, so yeah, I'm excited about my XYZ position. So yeah, this is the newest company to get added into the S&P 500. So what is XYZ stock? They're up 8.5% in the after hours market because they just got added into the S&P 500. So there's going to be so much passive flows going into this company now. A lot of like institutions can now just buy it, block. So this is just good news. And if you're wondering what is XYZ stock, well, this is the company that owns Cash App. Check that out. 67% of the revenue comes from Cash App, and then they own Square as well. And they've been struggling since 2021, just like a PayPal, a DocuSign, Peloton. A lot of stocks are in the same boat here. Yeah, they're making a lot of net income every quarter. Look at this. If you go to the operating profit, they're making a couple $100 million in net income every quarter. So I see why this one got added into the S&P 500. They're deleveraging their balance sheet by 5% year over year. So that's really good news. Actually, by 10%. On your YouTube, can you make a video, a simple guide on how to analyze stocks? Yeah, hey, Ethan, I do have one. I made it like, I think 3 weeks ago. It's called like How I Analyze a Stock. And I show you the exact financials I look at. So, yeah. All right, let's see here. TSN. TSN. Hey, is that Tyson Foods? So not Taiwan Semi, but TSN. So here's Tyson Foods right here. We have a lot of their frozen like products in our freezer. But unfortunately, look at this. Tyson's the same price as they were back in 2016. But I love the brand. A lot of people love the Tyson brand. And let's go check out the financials here. So yeah, look at this. We can see where the revenue comes from. Obviously, beef, chicken, prepared foods, pork. So the net income they barely had any net income this quarter, but I think this one, the risk reward actually looks pretty good on this one, I think. I mean, just because the net income like fell so much year over year, the other quarters look amazing. Yeah, the revenue's only up 0.02, so the revenue's not growing. The net income fell, so the margins just fell. But still, I mean, they're making, if you average it out, a couple hundred million every quarter. So what's the dividend? A 3.7% dividend. The payout ratio is getting a little high, 86% payout ratio. So that you do want to watch that. But still, I like the brands. How many times do you go live? I go live usually once a day, sometimes twice. Like, I go live every Sunday, this exact time. Every single Sunday, this exact same time, I go live. If you wanted to follow button. By the way, I'll sell nothing. I don't got a course, book, Discord. I don't got none of that. You like SoFi? I do, Ivan. The best undervalued stock you could buy right now is Novo Nordisk. Someone said, oh yeah, this is the Ozempic company. So, we'll go check this one out too. So this is the company that owns Ozempic. So, you say you day trade or swing trade mainly? I mainly swing trade, but I mainly just buy and hold great companies for the long run. Then I'll sometimes swing trade. But so here's Novo Nordisk. Yeah, this is the company that owns Ozempic. Yeah, hey, we'll look at SDM as well. So the PE is very low. You're right, the 17 PE. Now I think I read this in like the Morningstar research right here. Apparently, like the Ozempic patent expires in like 2027. So that's the bad news I see about that. But yeah, if we look at where the revenue comes from, 95%, they're obesity care products. And if we go to the net income, it's amazing right now. I mean, 4.2 billion just in the most recent quarter. You get a 2.5% dividend here. They did just drop Hims stock as a partner, which I did find interesting. TSN has a bit of risk because of the Kennedy Food Health stuff. Oh, hey, thanks for that, Tommy. Yeah. Yeah, y'all see the Coca-Cola is using like cane sugar instead of high fructose corn syrup. I feel like a lot of people are going to want to try the new Coca-Cola. So, hey, that hopefully is good for my Coca-Cola bottling company. So, Snowflake. Oh, hey, I saw that stock a few times. Yeah, then we'll look at SDM. I want to get to all these here. I do apologize if I don't get to your stock, but I'll try to get to all of them here. Yeah, we'll look at SDM after this. So here's Snowflake. This is Palantir's competitor. So this is like Palantir's biggest competitor. And there's some good news and there's also some really bad news about this stock right here. And I'll share with you both of them. So if you go to their product revenue, this is the good news. I mean, it literally just hits a new record every quarter. It's nearly $1 billion just this quarter, up 27% year over year. So incredible growth. I mean, look at this annual trend of revenue. 2020, 250 mil. Now it's 3.5 billion. But incredible revenue growth. But the bad news is the net income losses, and the trend isn't getting better. They're losing like 300 to 400 million every quarter. So not good, these net income losses, but I do love the growth there. So let's see, what is SDM stock? Let's check it out. Smart Digital Group. So hey, this one just IPO'd, it looks like, just in May. So I don't think I'll have too much history for me to look at. Very small name, a $400 million market cap. Let's see, revenue from internet media services. So look at that from 2023 to 2024. It 8x'd. So where's the revenue come from? So look at that. So this is not an American company. Most of the revenue comes from China. So yeah, again, not much history for us to look at here, but they did make net income for the full year 2024. They did make net income, which is great news. And the revenue exploded. So yeah, hey, maybe for a $400 million company, this might be pretty fairly valued. Looks like most of the shareholders are like the insiders. Anyway, that's interesting. My order's open for 2,500 shares for long term. Yeah, I like that one. Hey, they made net income. They're super growthy. Nvidia's at an all-time high. Do you feel like there could be a pullback soon, maybe on earnings? There definitely could be, but like a healthy pullback. So basically, Nvidia got permission to sell their chips again to China, and that's why they kind of gapped up on this day right here. And that's going to be a huge earnings tailwind for Nvidia and AMD too. AMD loved that news as well. But yeah, also Nvidia just partnered with Lucid. Did y'all see the Lucid Uber deal? Well, those cars are being powered by Nvidia's software. And look, Nvidia also has a lot of automotive, or not a lot, but they have an automotive revenue business, which is pretty cool. But obviously, Nvidia, we know they sell GPUs, 20% PC GPU market share, very big market share. And here's kind of why Nvidia just deserves this hype all around them. I mean, the revenue growth, what other company can do this? I mean, in 2021, 6.8 billion of revenue. Now for fiscal year 2025, 116 billion. I mean, it hits a new record every quarter, 40 billion just this quarter. So at this growth rate, what's it going to be this time next year? So I love the growth and the bottom line here. I mean, they're making literally 20 billion plus a net income a quarter, or are going to be. So hold on. How many Red Bulls did you drink before this live? Hey, I actually have an Arizona tea, half and half Arnold Palmer thing. So, Arizona tea is a legend. There's these huge. I was at Kroger. They have these huge Arizona tea cans for literally 88 cents, and I was like, I'm gonna buy that. So anyway, so here's SoundHound AI. There's one thing you got to look at for this company, and that's the subscription revenue. Nvidia used to own this one, and Nvidia sold out of this company. That's where they gap down this day. But if you're owning this stock, there's only one thing you got to watch, and that is this subscription service right here. So check this out. This is the main revenue growth driver. It literally is up 585% year over year. Went from 600,000, a nothing burger, to 25 million. Subscription revenue is all reoccurring, and at this growth rate up 5x, what's it going to be this time next year? So Sound on AI, I love the growth of the subscription, but bad news, little segment of revenue here, but the royalty revenue is down bad, down 50% year over year. So do note that. And they are still losing a bunch of money every quarter, but you're watching the subscription revenue right there. So yeah. How do you know how the Mets Monday work? Yeah, hey Bit, they're basically doing like a giveaway. Yeah, hey, that's awesome, Bitto. I'm an Oscar Open Sound. Oh, and Meta. Hey, you know what? Let's go look at Meta right here. Yeah, hey, what up, Jay? I'm in college right now. Hey, let me say that. This isn't financial advice. I'm not an expert. I'm literally a college student. I sell nothing. I don't have a course, a book, literally nothing. But if you want to help me out, best way to support me, subscribe to my YouTube channel. I'm streaming on there. Nathan Robert. What app is this? Hey, this is a brokerage right here, Card Collector. If you want to get this app I'm on, it's in the link tree in bio. First link there. It's free. It's an affiliate link. We'll both get some free stocks, actually. But yeah, if you want to get this brokerage, link tree in bio. First link there. But let's go look at Meta. I'll be really quick about this one, because we all know Meta, Mag7 name. They own Instagram and Facebook and Threads. And I just read an article. Threads is nearing the same amount of daily active users as X, which is pretty crazy. So look at their active users already. 3.4 billion daily active users. So half the world is on a Meta app once a day. And also they own WhatsApp, and they just announced that they're going to now put ads on WhatsApp, which is a huge earnings tailwind. I mean, it's just going to instantly create net income for them, which is crazy. They're already printing money, growing their margins. I mean, this is a $2 trillion company with a 40% net margin. Net margins. I mean, this is ridiculous. And do y'all see Meta's hiring like a super intelligence team, stealing talent from OpenAI, Apple. So Meta's just such an innovative company. They're going to be a winner. And the PE is a 27. I mean, I feel like they could go up to a 30 PE easily. Hey, thanks for the subscribe, German. I appreciate you, man. Yeah. Hope you're having a good Sunday. I'm trying to trade up to 5K in Nvidia long. Hey, good luck with that, bro. What do you think of QuantumScape? So yeah, what up, Aces? So this is the rare earth mineral play. So basically, QuantumScape, MP Materials. We're trying to be more independent from other countries, and basically, this is up on the MP Materials deal. QuantumScape is still a revenue-less startup. Like, actually, here, I'll show you that right here. Look, if you go to the revenue says zero, because they literally have never sold anything. They've never sold a product or a service, but the hope is that they're going to now finally be able to do that. They have a really good balance sheet, but they just have no revenue. They lose $100 million a quarter, and they have no debt. So it's like a mixed bag there, but they want to open up this mine that will supply, like, all of our rare earth minerals for like the next 20 years for all of America, the MP Materials deal. So that one's interesting. So, hey, Atomic Joe says, I love your content. Yo, thanks for the nice words. I'm going to give you a follow, Atomic Joe. Thanks for being so nice. So, all right, let's keep going here. MasterCard. Yo, MasterCard. Yeah, I think Warren Buffett just bought this stock. I don't know, but I'll be quick about this one. This is the boring payment processor. MasterCard, Visa have a shared oligopoly on their credit card payment processor. So Basically, those small little microtransaction fees that are slowly bankrupting us are making MasterCard a lot of money. And look at this. They're literally making over $3 billion of net income a quarter. They have a 0.5% yield. They raise their dividend every year. Someone said, do you stream on Twitch as well? No, I do not stream on Twitch. I'm only streaming on TikTok and YouTube. So yeah, for y'all on the TikTok stream, I'd really appreciate if y'all would go over to the YouTube channel, subscribe there. TikTok keeps taking down my streams. So, and I make YouTube videos as well. If you want to see my stock portfolio updates, I do a lot of those kind of videos. But someone said Spotify Technologies. Man, I wish I bought Spotify stock instead of paying for their subscription every month. You know what I mean? So check this out. Spotify, they're the best probably EU company. This isn't American stock, but they're European. But check this out. We can see their monthly active users. Last year, it was 615. Now it's 678. So they've really increased their monthly active users and their premium subscribers. How many premium subscribers? 268 million premium subscribers. And yeah, look at that. 90% of the revenue comes from their premium revenue, and the ad-supported tier is another 10%. But basically, look at this right here. This is ridiculous. I mean, the revenue's up double digits, 16% year over year, but they're making a couple $100 million of net income every quarter. The valuation is nutty. I would not pay the valuation. But they might deserve it because they're just so growthy, making a couple $100 million net income every quarter. And look at the free cash flow. The free cash flow is like double it. I mean, they made nearly $1 billion of free cash flow just last quarter. So they're deleveraging their balance sheet like crazy. Like if you look, here's what I mean by that. If you look at the orange number, the asset to liability ratio, it went from a 63 to a 50% while growing their assets. I mean, Spotify is so impressive. So is this Weeble? No. Oh my goodness. That's really loud. Dude, oh my goodness. Hold on. Hey, sorry for that. We're back. Hey, I accidentally just disconnected, but we should be back. Sorry if it lags for a second there, but let's keep going here. So let's see. SYM stock. So yeah, hey, what up, Bill? So this is Symbotic. I'll be really quick about this one because we've already looked at them a few times, but I see you saying this stock. So this is my favorite robotics company. Actually, Amazon is, but this is like a pure robotics play. This stock is nearing at an all-time high. But if we go to the largest shareholder, this is actually a warehouse robotics stock. And the main people they help out is actually Walmart. Walmart owns 13.75% of the stock. So that's really interesting. This one has real IP, real revenue, real growth. I mean, revenue's up 40% year over year. They're getting close to net income positivity. The year-over-year growth rates look amazing. So yeah, this is like a pure warehouse robotics stock. And I do really like them way more than like a Rich Tech Robotics and some of the other robotics stocks I hear. So buy the dip. What's up? What up, Sid? How's it going, brother? Any update on crypto? So yeah, I mean, I don't really. There was a bunch of stablecoin bills that passed. Yo, by the way, let me go check out the portfolio. We're up 0.16 in the overnight market. Meta's up 0.3, Google's up 0.6. So yeah, congrats if you own any stocks. Looks like, look at the just page of green right here. Looks like stocks are going to be pretty green tomorrow, which great news. We also have a Roth IRA. Let's see how that's doing. Yeah, these are all the stocks that we got in here. So all right, let's keep going here. What app are you using? Looks like Weeble. So yeah, hey Paul, this is actually another brokerage. It's called Moomoo. If you want to get it, it's in the link there. Link tree in bio, very first link there. It's my favorite app for analysis and stuff. But yeah, it does kind of look similar. And I have Weeble as well. Check this out. I do have Weeble, but that app, in my opinion, is way more useful and helpful. Yeah, here's my Weeble account. We got a lot of losers in there. So someone said, what's going on with Wendy's? So yeah, man, I feel bad for Wendy's. Oh, and then we'll look at RDW, and we can look at Robinhood as well. So here's Wendy's right here. Dang, look at Wendy's. You know, I love going. I always go to McDonald's instead. But yeah, Wendy's all-time or multi-year low. Wow, look at that. So if we look at the dividend, this is probably unsustainable, but they have a 9.55% dividend. The payout ratio says it's over 105%, so they can't afford the dividend. Luckily, they are still making net income every quarter, 30, 40, 50 million a quarter, but this is just not a good business model compared to a McDonald's. You know, Wendy's actually owns their stores and stuff, but you know, here I'll show you what I own. I own McDonald's, and I'll be really quick about this, but McDonald's is actually a real estate royalty company, and that's why McDonald's stock, one of the best stocks I've ever seen for a blue chip company. Look at this in 2008. McDonald's doesn't dip in 2008. they were the best performing stock in the S&P because they're such a recession resilient company. McDonald's actually in 2008 acquired a bunch of land. McDonald's is a real estate royalty company. You go spend $100 at any McDonald's. $4 of that goes back to McDonald's as a royalty. $4 of that sales and marketing royalty, and they own the land under 80% of the stores, so they collect rent and royalty from every store. Because the original people at McDonald's were like, we can't make money, we can't build an empire just making 15 cents on every burger. You got to own the land under the store, you got to collect royalties from the franchises. So McDonald's is just structurally a better company. Oh, no way, dude. Turk with the 50 roses, dude. No way, man. Turk, if you got a stock you want me to look at, let me know. I got you. We'll check it out. Meta to stay over $5.99. Oh, easy. I think I don't even know if Meta will go back down to 600 ever again. But yeah, I love, what is Sarah? I don't know what stock that is. Give me the ticker symbol for that stock and we'll check it out right there. So yeah. Bag Holders Anonymous. Yeah, hey, we'll look at Hood 2 stock. So ticker symbol Hood. This one kind of moves with crypto, but they're just so innovative. They're taking advantage of like the new tokenization. Like you could buy like SpaceX and OpenAI through their new, well, not in the US, but anyway, Robinhood, innovative stock right here. I mean, super growth. Yeah, I mean, we look at the revenue up 50% year over year. A lot of people pay them like for Robinhood Gold, their subscription, and they're making a couple $100 million of net income every quarter. I mean, incredible net income when they used to lose, like they at least just to lose a couple $100 million a quarter. No one could really buy that stock at the time. It was tough to see the vision for the future. Market's going to drop hard this week. Hey, Trig, that could be true, but right now overnight market is green. So, I've been feeling that for a while, dude. For the past like 5 weeks, or past couple weeks, I'm like, the market's probably going lower. But then it just never does. Yeah, look at the SPY. We're up 0.15%, and yeah, this April dip was just legendary. All right, let's see here. They have a large backlog as well from SYM. Oh, hey, really, SFG? I didn't know that. I had a friend buy Wendy's at 20. No. Hey, what up, Franco? Yo, hope you're doing well as well, man. Hope you're having a good Sunday, everyone. Yeah, hey, thanks for that, Franco. Good to see you, man. So yeah, we can look at not sure why I don't have Robert Half as a long term. So yeah, has anyone heard of Robert Half? I was actually just golfing and there was a Robert Half like stand there. They were trying to advertise the company. They gave me a free Robert Half water bottle. But basically, this is like if you don't have any workers at your company, you basically hire like a short-term contractor through Robert Half as like a short-term employee. Something. Wait, this is Restoration Hardware. This isn't Robert Half. I am not smart. Okay. What's the ticker symbol for Robert Half then? I think it's RHI. All right. Well, sorry. So this is the furniture company. Sorry about that. So yeah. Hey, Sylvie. Yo, Sylvie with the 4 roses. I really appreciate that, man. So Restoration Hardware, basically when we go into a low interest rate environment, people probably spend more on their houses and buy furniture and this kind of stuff right here. So yeah, basically going into a lower interest rate environment will really help out this company. And look, they are making net income every quarter, which isn't bad. So they aren't making net income every quarter. They are a bit leveraged. Well, really leveraged and more liabilities than assets, but the trend's getting better. But yeah, that's like a play on low interest rates. So yeah, sorry, that got a little complicated there. Oscar Health. So yeah, hey, this is the healthcare, Medicaid stock, and that's why the stock has fallen so much. There's been a lot of regulation for the healthcare industry. So, but for right now, out of all the Medicare and Medicaid stocks like CNC, United Health, Oscar is one of my favorite ones, if not my favorite one that I probably pick up because of the growth. They're really taking market share. I mean, what other company can do this? I mean, in 2020, revenue was $590 million. Now it's $9.2 billion. Literally just in the past 3 months, it was $3 billion. So really good growth on Oscar Health there. And they're starting to get net income positive. But the reason the stock has fallen is purely from government regulations or government problems. So it might be time to nibble on that one. And it's cool to see like that stock has barely fallen from like a United Health or like an ELV, for example, a United Health or an ELV. That one's really held up its ground compared to all the other ones. So yeah. Well, I'm on my way to Monday. I'm watching you out of South Africa. That's really cool, man. Franco from South Africa. Hope you're having a good Sunday, man. Oh, here's Monday for you. Yeah, nice. major bull market, but I'm not sure that would end sooner or later. Yeah, the bull market. Here's the thing: whenever we're in a bull market, not even the bulls expect the market to go up as much as it does. Like when we're in a bull market, not even like the mega bulls expect the stock market to go up as much as it does, is what I've noticed. So like not even me. Like I'm super bullish on a lot of stocks. Like I never like I loaded the boat on this one during this April dip right here. I never would have expected it to get to all-time highs within a couple months. I mean, no one expected this. So someone said TTWO. Yeah, hey, TTWO Take Two. And Opendoor is kind of in the same boat. Opendoor would love low interest rate environments. Um, so yeah, hey, actually, I want to talk about the rates in a second. Yo, Atomic Joe for the 5 roses. Thank you so much, man. If you got a stock you want me to look at, let me know. I got you. So here's Take Two Interactive. Yeah, this is the company that owns Rockstar Games. So this company owns GTA 5, The Sims, Red Dead Redemption. And they own GTA 6, and GTA 6 is about to be released, and that's basically a huge asset that whenever they release GTA 6, it's literally going to bring in well over billions of revenue to the company. So there's a lot of future growth to be had with Take-Two, and that's how they can justify the high PE, because there's a lot of future growth that's going to happen. You know, with GTA 6, they're probably going to sell like skins, DLCs, map, all this kind of stuff. And a lot of grown people will pay it. Like I've been seeing memes like, hey, I'm a grown man, I'll pay $300 for GTA 6. I don't care. But the thing is about the low interest rate environment. Here's the thing about the housing market. Like right now, a lot of people can't and won't buy houses because it's at a 7% interest rate. The rates are too high to buy a house. So they're waiting for lower interest rate environments. But here's the thing. Whenever we go into a lower interest rate environment, the value of every house is going to increase so much, so where you still won't be able to afford the house. It's like a tough dilemma. So anyway, let's keep going here. HAFN, yeah, Atomic Joe, thanks for the roses again. I appreciate that. He said, can we look at HAFN? I got you. So this company just IPO'd in 2023. So there's not too much history here, but let's check them out. They're a $2.6 billion company, so not huge. So medium range, long range. So I'm guessing they sell something I'm not allowed to talk about on the TikTok live. Let me actually, oh no, so actually no, this is a oil and gas company. So they don't, so that's not, that didn't mean what I think it means. So yeah, this is actually a oil and gas company. So all the revenue comes from Norway, so that's interesting. So this is a Norwegian stock. So let's see net income right here. So the revenue is down 30%, so the net income is also down bad. But still, that's probably just because of oil prices. But yeah, they're making a lot of net income every quarter, though it did fall 70% year over year. Do they pay a dividend? Okay, whoa, a 22% dividend yield here. So that's probably why you like the stock. I'd be careful here in Norwegian stock, but you get the nice dividend, exposure to oil and gas and that country. So hey, that's interesting. They just IPO'd. I don't have any real thoughts. They sell news. What's up, A1? No question, GTA 6 would be the best-selling game ever. Yeah, it'll be a top one up there. Although it wants lower interest rates, maybe instead of reaction to a recession this time, they force them lower and lead to hyperinflation. Yeah, hey, NASCAR, I kind of agree with you. Trump wanted interest rates to be cut like months ago, and so far the data is showing that interest rates being high has been a good idea. So what app using? Hey, Ty, yeah, if you want to get this app I'm on, it's in the link tree in bio, very first link there. It's actually a brokerage that I'm on right here. So it's my favorite app to do analysis and stuff. So someone said Google. Yeah, we'll look at Google real quick. And I love this company. I do own them. Here, I'll show you my position in them just so I can be transparent. Yeah, oh, dang, the market's going up and up in the overnight market. But yeah, here's Google. They're up 0.62% in the overnight market. We are up 15% all time in here. And they've had a really nice uptrend since April. But let me show you the financials here. I think this one's still undervalued. Again, none of this is financial advice here, but look at the valuation. The PE ratio is a 20. So Google trades at a 20 PE. The reason that PE is so heavily suppressed right now is because of the of basically OpenAI coming for Google searches moat. Like they're slowly going to take market share every year. So that's the bad news. But for right now, the company's doing incredible and they're growing it and through a bunch of other segments. They own Android, they own Waymo, Google Cloud, cybersecurity with Wiz. Like Google's just so innovative. They're in quantum. But look at the revenue. They're also a margin expansion story. Revenue's up 12% year over year on Google, but the net income is up 45%. So what that means in English is the company's expanding their net margin. They now have a 38% net margin, grew 30% year over year. So incredible margins. Half the revenue comes from the US, and you get a dividend here, a 0.5% dividend. So yeah, I do think that one's a great buy and hold for the long run. When is GTA 6? Yeah, that's a great question. I think they said they delayed it, but sometime probably, I think it's not this year. So I think it's going to be in 2026 is when it's going to be released, which is actually crazy. So yeah, let's keep going here. Yeah, if you guys got any stocks you want to look at, let me know right here. So let me pull up the this app right here. I want to see how we're doing in the overnight market. Oh, yeah, I wanted to talk about Sprouts Farmers Market as well. So yeah, here's my most recent purchase too. I want to talk about Progressive and T-Mobile. We'll just do that now. We'll start with Progressive right here. This is a stock that I love and I've been loading the boat on, and I own 2.4 shares of them. So the market is pretty close to an all-time high, but this company is pretty well off all-time high. So I didn't mind buying that one, even though the market's been really hot recently. But here's Progressive right here. This is an insurance company. You've probably heard of Flow and seen the commercials and stuff, but look at the growth here. We look at their personal lines, which is their main segment of revenue. I mean, look at the growth here. I mean, it just hits a new record every quarter, up 23% year over year. I mean, that's the growth I love. I mean, for the full year 2024, I mean, 61 billion of revenue, and that's the personal lines. They're also in commercial lines. Look at that one as well. Full year 2024 also at a new record. So they're just a really growthy company, but the best part is the net income, and they just reported earnings. That's incredible. 3.2 billion of net income the most recent quarter. So this is incredible. Yo, Richard said, I bought Progressive. It's killing me. Yo, after looking at these earnings, man, I'm about to buy more Progressive. So actually, let me show you this right here because this is really cool. So I like showing you the numbers for yourself. So look, they made 3.18 billion of net income in the most recent quarter. So 3.18 billion, and their dividend only cost $58 million a quarter. So I made $3 billion and their dividend only cost $58 million a quarter. If you're wondering then, hey, why in the most recent quarter does it say their dividend cost $2.7 billion of net income? Well, that's because this company actually just did a special dividend. They gave you, it was like a huge special dividend. Where was the special dividend? Oh, yeah, $4.60 back in a special dividend on top of the regular dividend. So they have so much extra money. They're paying these huge special dividends. They made $3 billion the most recent quarter. So I just like Progressive. But yeah, hey, that is going to hurt their moat. So yeah, Progressive, they do auto insurance. And yeah, if the Tesla robot thing is right, or robo-taxis, Waymos, the odds of getting into a wreck and the car being damaged are way lower, and so the cost of insurance is going to go down. So that might be a moat thesis problem for Progressive, and I understand. I get that, yeah. So that might be why the stock is kind of struggling a little bit. I don't know, but I also want to talk about real quick Sprouts Farmers Market. This company has literally moved like Nvidia. Like if we zoom out, I mean, look at this, one of the best performing stocks. And that's because has anyone heard of Sprouts Farmers Market? They're like a healthy grocery store. And check this out. For grocery stores, you really want to look at their net margins because these are really low margin business. Like Kroger has a 2% net margin. But look at this. Sprouts Farmers Market now has an 8% net margin. That's why this stock is moving like Nvidia, because they're able to have this net margin expansion. I mean, I don't believe it. So they now have an 8% net margin up from 6%. The difference between a 6% and an 8% margin is huge. So they had a record net income quarter, 180 million in net income. The revenue's up 19% year over year. So I love Sprouts Farmers Market, man. Congrats if you own that one. Yeah, that's true. The robots will still need to be insured, but they'll probably just be insured by Tesla themselves. Or, yeah, I don't know. That is really interesting. People don't seem to care about the recent earnings, unfortunately. Yeah, that's weird. Yeah, the earnings were phenomenal. A record net income quarter, $3 billion in net income. So another stock I recently bought. Oh, and I also bought PSIX right here. I made a short about it the day I bought it. I made a short this day about this stock. I bought PSIX. I made a short about it this day. The next day it falls like 10%, and I got a bunch of comments like "L buy." But yeah, this is PSIX, a company I love. They're only a $2 billion company. I put it on your watch list. I certainly wouldn't buy it at 90, but they're only worth $2 billion. And the reason is I bought them is because the financials are so good. I mean, they're printing net income at this point. The revenue's up 44%. The net income's up 168%. Incredible double-digit margins now. So PSIX is one that I've loaded the boat on. But another one I want to talk about is TMUS and T-Mobile. And I see some stocks in the chat here. I want to get to them, by the way. I'll get to these stocks. But I want to show you T-Mobile. And again, I sell nothing. I don't have a course, a book, Discord, WhatsApp, Telegram. I sell nothing. Just on here, give my opinion. And best way to support me, hey, drop a like on the stream. I appreciate that. Hey, Six Figure Bank, thanks for the kind words, man. I appreciate that. Yeah, I agree. Buy and hold's the best way to build wealth. I mean, and honestly, a mistake that I've made and a lot of other people I see make is like they sell out of great companies just because they're up on them. Like they do the best thing. They buy a great company at a great price, and then they sell out of the great company. That's going to just be a continuous winner in the long run. So, my advice, buy great high quality companies and just hold them forever. Luckily, we're up on every stock in here. Yeah, here's my year to date. We're up 8.64% year to date, 13% on the 1 year. And this is my dividend growth strategy portfolio. Anyway, sorry, I'm all over the place. I do apologize. Anyway. But here's T-Mobile right here, another company that's growing their margins like crazy. Anyone see the Mint Mobile Ryan Reynolds ads? I mean, they were genius. That's owned by T-Mobile. But the revenue is up 6.5% year over year. So okay, revenue growth, 6.5% revenue growth, but the net income is up 25%. So incredible net income on this company. So if we go to the net margins, I mean, another company with incredible margins, 15% net margins. And so if you're wondering, what is T-Mobile doing with this money? So T-Mobile made $3 billion just this quarter. What is T-Mobile doing with all that net income? Well, first off, they do pay a dividend. Oh, hold on. There we go. They do pay a dividend. The dividend only cost $1 billion. It's on the left there. The dividend only cost $1 billion. So what is T-Mobile doing with the rest of their money? Well, this is why I like T-Mobile so much. They are a stock buyback behemoth. I mean, they spent $2.5 billion just in the most recent quarter buying back their own stock. They're literally spending 2 times more on stock buybacks than they are on their dividend. They spent last quarter $4.7 billion buying back their own stock. I mean, just incredible. So if you go to the total common shares outstanding, you literally own 3.4% more of the company than you did 1 year ago. So you own 3.4% more of the company on top of the dividend. So that's why I bought T-Mobile. I think this one's just going to continue to be a winner. And the PE is like a 21 PE. So yeah, hey, A1 Steak said TSSI. That's one of my most recent purchases. Here's my Roth IRA, by the way. It's really small. It's only $1,400, but one of my most recent purchases is, and these are all very small companies. Literally, go watch my most recent YouTube video if you want to see why. And I'll go over it real quick, but I just bought a very small amount. TSSI, DCTH, and GHM, these are all companies under $600 million market cap. So normally stocks I don't really like to talk about because they're so small, but TSSI very much impressed me, so I decided to buy them. And let me go pull up their financials and show you what made me buy the stock. And I put this one on the watch list right here. So let's check it out. What's your favorite AI stock right now? Ooh, that's a great question, Jeff Mack. How's it going, man? Yeah, happy Sunday, guys. I don't know. Let me think about that. So if we look in the top right, very small name. Let's see market cap, $580 million. So first off, very small market cap, but here's why I like them. So remember, the whole company's worth $580 million, and look at this net income. This is after-tax net income. So let's say you could buy in at this valuation. You could buy in at this $600 million valuation. Let's just say you bought the whole entire company for $600 million. I mean, you're buying a company that literally makes a couple million every quarter of after-tax net income that's growing like crazy. So it's going to be even more next year. And look at this revenue. The revenue literally went from last year, 15 million to 98 million, up 5x, up 522%. So TSSI is one that I think is kind of worth the 600 million market cap, where I'm going to pay for that. So again, these are really risky. Here's the thing. You don't want to have huge chunks of your portfolio in these risky kind of stocks. And I have that as well. Like I own a lot of these, like a Super Micro, a Rumble, SoFi, Robinhood. You don't want to have a huge chunk of your portfolio in them. You start them out as a small couple $100 position, $100 position, and then you let them grow into bigger positions if they're really a winner. And you really only buy them once you're down a good chunk on them. So yeah. Hey, that's what's been really good with PSIX. Remember, I've been talking about PSIX for a while. This one just continues to win. It's been incredible. So, anyway, let's keep going here. Favorite AI stock, though? Man, I mean, I love Reddit, Amphenol Group. I mean, this one's I don't know, man. Google and Meta, man. Meta has a huge intelligence team now. I mean, I love Meta. Oh yeah, we can look at Costco too. Hey, we just looked at Sprouts Farmers Market. Costco, this is another great stock to buy and hold for the long run. Oh, and I want to look at Netflix too. Yeah, hey, remind me to look at Netflix. But Costco, this is that grocery store that you need a subscription to get into the store. So first off, Costco makes a lot of recurring revenue from their subscription, and customers love it because you buy stuff in bulk. So consumers feel like you get a good deal. You're buying like a huge pack of whatever, fruit snacks or muffins or something, and it's in bulk, so you get a good deal. And look at this net income they print. I mean, it's crazy. I mean, they're making nearly 2 billion of net income every quarter. You get a dividend. They sometimes do special dividends as well. So Costco's one I really like. They have a gas network as well, rewards program. Costco's been selling a lot of gold recently. I've read an article about Costco selling a bunch of gold in their stores now. So that's interesting. What stock are you excited for the earnings this week? So yeah, if we go to the earnings hub right here, I do believe Tesla, I think, reports this week. So on Monday, we get Verizon. Tuesday, we get Coca-Cola and a lot of other companies. But Wednesday, we get Google and Tesla. So Wednesday is going to be very interesting. Google and Tesla. I'm really excited for Google. So that's what I own. But yeah, we do get some fun earnings this week. So yeah, I opened YouTube, and after 2 videos, it got me back to your channel. Hey, Jarman, what's up, dude? Appreciate you, man. Yeah, we'll probably be live here for another 20 minutes or so. If y'all got any last minute stocks you want to look at, let me know. I got you. But let me go pull up Netflix. So NFLX, man, they just reported incredible earnings. Actually, so did Taiwan Semiconductor. I got to pull up Taiwan Semiconductor as well because they deserve to be up another 10% from here, in my opinion. But here's Netflix. So incredible earnings, but they have too high of a valuation. So even after these earnings, even after this little dip that they've had, they're still trading at a 51 PE. So that's still a bit of a high valuation. But here's what's so great about Netflix. Well, look at their premium subscribers. So the Super Bowl is now on Netflix, but their premium subscribers went from 260 million. So last year was 260 million. Now it's 301 million. So incredible growth of their subscribers. I mean, they're doing their their password crackdown successfully. It's really bringing in new subscribers. But this net income is ridiculous. I mean, they're making 2 to 3 billion of net income every quarter. Net income's up 45%. Over 3 billion in net income just this quarter. That was incredible. And the free cash flow is just as good. They're making 2 to 2.5 billion of free cash flow every quarter. So they just print money. Kind of a tariff resistant stock there. Squid Game's making them a lot or something. So yeah. I learned today that APP has a highest market cap for any company that isn't in the S&P 500. Yeah, so AppLove, and I am in love with this stock right here. So the valuation might still be a little too high for me, but let's see. Yeah, wow, $123 billion company, and they're not in the S&P 500. I know they're going to be a contender for the next time we do get an S&P 500 inclusion. But yeah, look at this. This is an advertising stock, and this is why they deserve the hype, the high PE. Look at this right here. The advertising revenue is literally up 71% from the previous year. I mean, look at it just has a new record every quarter. It was 1.1 billion of advertising revenue just this quarter. So 1.1 billion in advertising revenue, and in that they made 830 million of free cash flow. So the free cash flow is doubled. It's up 111%. The net income's even better. I mean, it's up 144% year over year, $500 million in net income. So AppLove, an incredible fundamentals, incredible growth. The growth is just going to continue. So I do think the valuation might still be a little stretched here. What is it? 65? I could expect them, well, if they double their net income, it might still be a little overvalued right here, but I love this company. I'd love to get exposure to that stock if they go a little lower. So yeah. Here's another from my Broadcom. Hey, we'll look at Broadcom, then we'll look at SLV. What up, Jamal? What's up, SoFi? Yeah, we'll look at SoFi too. Also, Meta is suing AppLovin for some reason. I didn't read into that, but I saw an article that Meta is suing AppLovin. But let's go look at Broadcom right here. This is an incredible play. I mean, they're bigger than Tesla. $1.3 trillion company. So $1.33 trillion company. And you get a nice yield here, 0.8% dividend yield, better than Nvidia's yield. But a lot of people know Broadcom. Mm. A lot of people know Broadcom for their semiconductor solutions, but this is a huge software play. Check this out. Their infrastructure software, it's seen just incredible growth. I mean, it's up 25% year over year, but that's after being up 200%. So it used to have 2 billion of revenue. Now it's 6.6 billion, but the best part is actually the profits they're making. Like if we go to the FCF, which is free cash flow, they made 6.4 billion of free cash flow. They're making 5 billion plus of free cash flow a quarter, 5 billion in net income in the most recent quarter. They had a little one-time adjustment back here, but they're just printing money. They deserve to be at where they are. What about crypto? Anything you recommend? Yeah, hey, Pool Guy, what's up, man? For crypto, I don't actually own any crypto. I kind of wish I owned Bitcoin because Bitcoin has just been crushing it. But yeah, I don't really own any crypto. I do own Robinhood stocks, SoFi, that kind of moves with crypto. But yeah, there's some cool features about Bitcoin. Like with Bitcoin, there's no earnings, so they can't miss on net income. Bitcoin can't miss on their net margin. It's kind of a cool feature about them. But there's nothing for me to really analyze there besides technical charting. So hey, but I wish I owned them. So what is SLV? Let's check this out right here. Let's see here. Another from my portfolio, SLV, give it a review. Let's check it out. So, hopefully sorry, my Wi-Fi is a little buggy today. But we will get it pulled up here. Yeah, no problem, Pool Guy. Then we'll look at SoFi and Sentinel One as well. Oh wait, SLV is, you mean silver? Oh, this might just be, okay. Oh, the iShares Silver Trust. So yeah, a lot of gold is doing really. If we look at them on the monthly, though, silver is kind of the same price it was back in 2013 or not much up. So these precious metals, they don't outperform the market in the long run. So there is some conspiracy around these metals. Like the U.S. literally goes out of their way to devalue gold and devalue silver on purpose, artificially, to give other countries less power. So there's it's tough with some of these commodities, but they've been performing amazingly. Like silver right now is at an all-time high. If we go to IAU gold, it's at an all-time high pretty much. So yeah, these precious metals have been performing incredible. You don't get any yield though. I love dividend stocks, as you know, but these don't really give any dividends. But the precious metals have been performing very good. But you're basically just buying a commodity. I can see why people like it. So yeah, SoFi stock. So this is your fintech stock right here. They have their own banking charter. They got their banking charter through a loophole that's patched because of them, but they're impossible to get. But SoFi right here, they're a lending company. The student loan forgiveness thing ending is great news for SoFi. And if we go to the lending revenue, which is 53% of the business, it's up 25% year over year to a new record. So the lending revenue has been performing very well, and that's their main source of revenue. So the lending revenue is up 25% year over year. But actually, the best part is the financial services revenue on SoFi. And yeah, here it is. The financial services revenue is up 101% from the previous year, literally to a new record. So incredible growth on SoFi. So that's why I think they kind of deserve the hype where they're at right now. And they're net income positive, making net income every quarter. So can't complain about that one. Sentinel One for cybersecurity. So yeah, that's ticker symbol S, right? So yeah, they're one of the few stocks with a singular letter ticker symbol. I mean, there can only be 26 of them, right? And there's no ticker symbol Z. Or actually there is. The ticker symbol Z is Zillow. Anyway, here's Sentinel One. I do like this company. I don't think they're making net income yet. Let me actually check. So yeah, look at this. This is why I think the company's been struggling in terms of stock price. They're not at all-time highs right now, just because they're not making any net income right now, and the trend isn't really getting better. They just lost 200 mil the most recent quarter, but this revenue growth is really impressive. I mean, revenue's up 23%. I mean, I think the revenue's at a record, so up 23%. Very good balance sheet. They did leverage up a little bit year over year, but probably because of the net income losses. But I do like that one. I've purchased a lot of XRP. In my opinion, they will double in price in the next 5 years. Isn't XRP already done really good? Let me actually pull up XRP really quick because I can pull up the chart. Let's see, XRP Ripple. So yeah, look at this right here. They're ripping through to all-time highs. So Yeah, for them to hey, what's the did they say market cap? Oh, I don't think I can see the market cap on this app right here. But yeah, look, congrats if you own XRP before today. It looks like they've been crushing it. Um, let's see. Commodities will always go up when interest rates. Yeah, that's kind of like with oil. Like we go into actually, I want to pull up an oil stock. Thoughts on small caps in the next coming few months. So I don't like the IWM. If you're gonna buy small caps, in my opinion, this and I don't normally say this, but I think you got to pick and choose your small caps because I've looked at the IWM, the Russell 2000. A lot of these companies are zombie companies that are begging for low interest rate environments. So they literally have so much debt. The debt is more than their market cap that they literally can't make enough money to pay the interest on their debt. And that's like 40% of the companies in this ETF right here. 40% of the companies in the IWM are zombie companies where the interest on their debt is just too much. So this is kind of begging for low rates. But yeah, I like to pick and choose my small caps personally. And I'll show you three I just picked. Again, not financial advice here, but the three I just picked, and these are all under $600 million each. I want to look at DCTH too. And so GHM, DCTH, and TSSI all have under $600 million market caps. And I did just buy all of them. Actually, I want to show you. I'm going to show you this stock, and it's going to impress you. I mean, if this doesn't impress you, feel free to hit the dislike button because this stock actually just made a video about them. Blew me away. And then I'll get back to some of these stocks in the chat here. But look in the top right. You see market cap, 391 million. So first off, remember, the whole company is worth 390 million. 390 million, and this company has no debt at all and $58 million of cash. So first off, a good chunk of their market cap is just cash. So $58 million of cash, and I'll show you the no debt just so you can see. Yeah, look at how they paid off all their debt. They used to have a bit of debt, but now in the most recent quarter, the debt says zero because they literally have no debt. So 60 million of cash, no debt, and look at the growth. 20 million of revenue just this quarter. And on that 20 million of revenue, they literally made $1 million of net income. They're net income positive at a $400 million market cap with no debt, 60 million of cash. And also, here's another cool metric. When a company has a bunch of cash and no debt, because of this high interest rate environment, they're actually able to make interest. So look at this. For the longest time, this company was paying negative interest. But now, since we're in a high interest rate environment, instead of paying these high interest rates by having debt, when a company has a bunch of cash, 58 million of cash and no debt, they go park their cash in the little 1 to 3 week treasury bills, and they made 300,000 of interest. So anyway, DCTH is a small cap I just bought for the financials and the growth. So no way, yo, I didn't even see that. Caspa, dude, with the $5 super chat. Yo, I really appreciate you, Caspa. Hope you're having a great Sunday. Yeah, if you got a stock you want me to look at, let me know, man. I really appreciate you, Caspa. Thank you so much. What app are you using? Yeah, hey, check it out, said, what app are you using? So yeah, this is actually a brokerage right here. If you want to get it, it should be in the link in the description, the first link there, but it's also in the link tree in my bio, or the link tree right there. It's the very first link in there. It's a brokerage. It's called Moomoo. It's my favorite app for analysis and stuff. It's where I park my idle cash as well. If you look in the middle of my screen, I got lots of cash, earning interest. So yeah. And I love all the analysis you can do. I'll say this, it's been 10 days since we had a 10x intraday mover on average. Hey, yeah, we will not see a drop in interest rates until November to boost Christmas sales. Oh, hey, that's interesting. Yeah, well, I remember we saw the odds. I remember the odds of a July rate cut was 28%, and now it's 0. So there's like no odds of an interest rate cut in the next couple months or so. Yeah, that is one thing. You gotta grow. So someone said Apple. Yeah. Hey, just the largest company, or actually, I remember Apple used to be the largest company, but now they're the third largest. Actually, I'll show you that. If we go to the top stocks by market cap right here, hold on. I have a watch list here of the mega caps. And look, here's the top stocks by market cap. Nvidia is worth 4.2 trill, Microsoft 3.8, and then there's Apple. $3.15 trillion company. And let me go look at Apple for you. Hey, look at this. This app is telling me that there is a double bottom. It normally says the rise probability. Let's see. Yeah, it says there, oh, wow, a 95% chance of a rise probability according to Moomoo. But let's go look at the financials here. So obviously their best product is the iPhone. iPhone is half their revenue. And then they're in the services business. So whenever you go buy something on the App Store, Apple takes a 30% fee on that, and it's all super high margin for them, basically a royalty. And it's now nearly over 100 billion of annual revenue for them. 96 billion, incredible. Then they have the Mac, the wearables like the AirPods and the wrist, what's that called? The Apple Watch. And also, here's why Apple is so affected by tariffs. Did you know only 36% of Apple's revenue comes from the US? You know, I always thought it was much higher than 36%, then 25% EU, then China, and then all these other countries. But yeah, their best product is the iPhone. A lot of people are locked in the Apple ecosystem. Like I'm on an Apple iPhone, and they're making a bunch of net income every quarter, but the growth is slowing. Like revenue is only up 5% year over year. There is some slowing single digit growth, but yeah, I love the net income they make, and a lot of people are permanently gonna buy the iPhone for the rest of their life. Um, what was the one at $11.25? That I think that was DC. Was that DCTH? Let me go back and check. DCTH. So yeah, $11.62. This is the $400 million company with 60 million of cash, no debt, lots of growth. They're making interest on their cash. So yeah, hey, just scroll back if you missed anything. We just did an analysis on them, and you know what? We looked at TSSI, we looked at DCTH, and now I want to show you ticker symbol GHM. This is the one I almost trust the most. If I go to my total equity and all these stocks here, I put $100 in DCTH, 100 in TSSI, and I put 200 in GHM. So you know what? Let me show you the GHM. I actually found this on the watch list right here. So there's a bunch of watch lists right here. Like you can see the super investors portfolios. We'll look at Nancy Pelosi's portfolio in a second here, but there's this Trump pushes energy order to power AI nuclear stocks, jump on this. And one of the beneficiaries, they say, is ticker symbol GHM, Graham. So let me show you why I bought this one. And hey, look in the top right, again, very small name, $560 million company. So remember, this whole company is worth $560 million, but look at this. They're making millions every quarter. This growth is incredible. They made 4.4 million of net income just in the most recent quarter. So that's like nearly 1% of the market cap they made just in net income this quarter. And they're really growthy. Revenue's up 21% year over year. They're in a good industry, really good balance sheet. What about cash from operations? They're investing a bunch. But yeah, I love the net income here. They're making net income every quarter. Low market cap. They're in. I did a YouTube video, my most recent one, 3 stocks I bought, where I go in their investor presentation and show you that. So yeah, obviously my favorite nuclear energy stock is CEG. This is a company that you kind of just, I think, have to put on your watch list. I definitely wouldn't buy them here though. Here, I'll show you my position in them, by the way. CEG is my second largest holding, been one of my best performers. This is the largest nuclear energy stock in the world in the US. They own literally 50% of all the US nuclear reactors. Largest pure play, largest publicly traded nuclear stock. And they're also buying a company called Calpine, and it's instantly accretive, $2 of yearly EPS. So the EPS, whenever this goes through, is just going to go up instantly by $2 a year. So strategy is coming for Apple spot. Hey, yeah, MicroStrategy, dude. We can look at them. Wow, Apple spread out. If you look at their 5-year span, they've lost 77% of their stock value. Yo, which stock there, German? Oh, I think you're talking about a DCTH on Weeble. I don't see the numbers you gave us. I have Weeble as well. Actually, let me see. DCTH, $390 million company. So yeah, look at this. Revenue at a record, net income million. So look how they deleveraged their balance sheet, monster balance sheet. They basically issued a bunch of shares. They diluted the shareholder a bunch to really fortify their balance sheet. But yeah, look at this. I should probably zoom out to show you more context that this company has been dead money for the longest time. But as you know, I judge them by their fundamentals. They didn't have any revenue back then. This is kind of what you're buying, a company with no revenue. But this is the stock price has really not gone up much for the huge, for all the progress that they've made, increased their revenue dramatically, making net income now, no debt, 60 million of cash earned interest. So yeah, that's I get that though. They're still a very small company. With these risky companies, you definitely don't want to have a huge chunk of your portfolio on them. Keep them as very small positions. Let's see what's up on the overnight market. Hey, Calmain. Hey, you guys might like this stock. This is another commodity stock, but this is the company that has the largest market share for chicken eggs. So this is one of the largest egg producers in the U.S. and they have a 6.3% dividend. They kind of change their dividend every quarter based on how much they made. They paid $3.50 the most recent quarter. the stock price is $100. So that's a 3.5% return. I literally bought this stock at all-time highs. So as you know, I don't normally like buying stocks at all-time highs, but this is one. I mean, I bought pretty close to all-time highs. I didn't mind buying Calm Main at all-time highs. I wanted to just share this with you guys. In Calm Main, this company, there's been a lot of fears around the bird flu. A bunch of chicken supply got wiped out. A bunch of chicken egg places were burning down and stuff. So basically, all that stuff helps out Calm Main, and they just had a record $500 million of net income just this quarter. They made $500 million of after-tax net income, and the whole company is worth $5 billion. So they've made over 10% of their market cap just in net income this quarter. So, yeah, hey, when you click on the max button for DCTH, it does look a little scary. Yeah. So yeah, they have the largest market share for chicken eggs, Calm Main Foods. So yeah, and they have a nice dividend, a 7% dividend. They have traded like a 4 times PE. So yeah, so CPRX, someone said, this is my only really healthcare stock. So another one I bought pretty close to all-time highs, and I am down on my position. Look at this. They haven't been doing too good. Unfortunately, a lot of the healthcare names have been struggling. But here's why I like this one. First off, monster of a balance sheet. So no debt on this company. How much cash? So first off, no debt. Look at the cash on the left. $580 million of cash. And the whole company is worth $2.5 billion. So you buy a company for $2.5 billion. They have no debt, $580 million of cash. And look at this net income right here. This is another one that just prints money. I mean, over $200 million a year, super growthy revenues. Like, look at this revenue. It's at a record. And they had a little one-time adjustment to their net income that one quarter. So monster balance sheet, cash from operations is crazy. I want to show you the individual prescription that they sell. I forget the name of it. So if we go to CPRX right here, they sell this, so I don't even want to try and pronounce it, Fridapsi or something, I don't know, but it's been growing very nicely. The revenue's up 25% year over year to a new record. How about these other ones, like how's Agramir? Well, dang, look at this one. Literally, they just made this product last year. It was $1 million of revenue. Now it's $22 million. So basically, they sell a bunch of these little prescriptions, and they're making a lot of money from it. They have no debt, lots of cash. So as you know, I just love looking at fundamentals. And these are stocks with great fundamentals, in my opinion, where the risk to reward seems very fair for me to, I'm even fine buying some of these stocks at all-time highs. Yeah, hey, German, have a great weekend, man. Happy Sunday. Thanks again for showing up. I appreciate all the support. Which one was the chicken egg stock? Yeah, here, let me go back real quick. That was ticker symbol CALM, Calm Main. I don't really mind if we zoom out. I pretty much bought this stock at an all-time high, and I think it's just going to continue to hit all-time highs. So if you look on the left, the PE is a 4. The forward PE is a 4. So it's hard to see. It's on the very left there, the PE TTM versus the PE forward. So the trailing 12 months PE is a 5.2. And the forward PE is a 4.3. So here's a company that means they're expected to grow their net income by 20%. So their yearly net income, or the next year's net income, is supposed to grow 20% from here. And this company has a 6.4% dividend yield. Their dividend changes every quarter, but yeah, that's the chicken egg play. People always eat eggs. Healthy people. I just love eggs. Anyway, no side healthcare is recovering, just a sector. Yeah. Opendoor. Hey, Caspa, dude, thanks again for the super chat, bro. I got you. OPEN. So Opendoor, this has been a huge momentum name recently. Let me pull it up for you here. Hopefully this will load here. So here's Opendoor. Yeah, we can look at United Health as well. So United Health, I think that one looks really good to nibble on as well. So here's Opendoor Technologies. I mean, look at this absolute monster of a rally. This stock really needs interest rates to go lower for people to really start buying houses again. So here's the thing why I'm staying away from buying shares. This you would want to swing trade this one, but this is definitely a stock, in my opinion. You don't buy shares and hold this for the long run. So look in the top right, the market cap, $1.64 billion company. So this whole company, and that's after this rally, this potentially unjustified rally. So they're worth $1.6 billion. And if we go to the net income, they're losing nearly $100 million of net income a quarter. So that's near $400 million a loss a year. So not great in terms of financials. And look at this, the revenue. I mean, the revenue's down 2% year over year after being down 60%. So look at this. This is why high interest rate environments help them. Look at 2021, 2022. The revenue was literally 4 to 5 billion a quarter. Now look at that. It went from 45 bill a quarter to just a billion. So, or 1.15 billion. So we really want to see rates come down to really help this stock, and hopefully will help out their net income, because there's honestly, there's some bankruptcy risk here, just because they literally lose a lot of their market cap every quarter. So yeah, I feel like that one is a bit of a little, pump and dump there. But let's see. What was this? I love extra my head down. Hey, what up, Joshua? Hope you're having a good night. Yeah. So let's see. UNH, we'll look at them as well, because we haven't looked at them in a long time. So look at that. They've had a rough week. Look at this. So that's why I think UNH is potentially a good nibble right here. Not a full position. Don't go all in on this one as a full size position. I think it's like reasonable for like a quarter size position. So where if it drops another 10%, which is probably likely, you're not really screwed out there. So, or you could do like a trailing stop on United Health. But anyway, here's why I like the risk to reward here. The PE is like pricing in the fundamentals to collapse. Like an 11 PE, this is pricing in the net income is going to fall like 30%, which I don't know if it will. But yeah, we're a customer as well. We use the OptumRx, and the OptumRx has seen a lot of nice growth. And I mean, look at this. For the full year 2024, it was 133 billion of annual revenue. I mean, look at how it spiked up since 2020. So yeah, incredible growth on the OptumRx business, and the United Healthcare business is doing really good. But also dividend play, you just buy shares of this one. No matter what the stock does, you're getting a 3% return a year and a qualified dividend. So that's great. Here's the net income right here. They're making $6 billion in net income a quarter. They got hacked this one quarter and had to pay out a fine, but that's why the net income went negative. That was a one-time adjustment. But yeah, United Health, I think it's worth a nibble. Though the sector, it's a tough sector right now. Government is not friendly with them. Regulation's not on your side. So, yo, Will, hope you're having a good day, brother. He said AVPT. This one's on my watch list. This is AvePoint, and I do like this stock. I think they're going to continue to win. Though the valuation's a little high, they deserve it. So here's why, in my opinion. So check this out right here. If we go to the sales right here, the revenue, look at that. It's now nearly 100 million. So it's up 25% year over year. Really good growth. And they made net income on that. They made 3.5 million of net income. So and that's real money as well. We can see from their operating profits. So probably this time next year, they're going to be making net income every quarter. Oh, hey, look, I made a video. 3 stocks of massive upside. On May 26th, I made a video about them. Anyway, net income positive. And look at this. Oh, dude, the balance sheet. They're deleveraging while growing their assets. I mean, this is best case scenario. So I basically can see why AvePoint has done so good. So looks like a lot of Chinese people own this stock right here or something. Let's see. They are a U.S. Yeah, they're quartered in U.S. and New Jersey. So cool. I do like them. But 3% isn't great. Wait, I forget what we were looking at. 3%. Let's see. I day trade large caps, but this is the best way to build wealth, buy and hold. Yeah, I agree. If you look in the top left of my screen, you see how it says buy and hold portfolio. This is my buy and hold account, where once I buy a stock in here, I try not to ever sell it. I literally just buy it and I've never taken a single profit on Powell. I've never taken a single profit on any of these stocks. And also, it hasn't worked out for some companies. Like, look, I recommend if you want to buy a stock, you should slowly buy into the company. Don't spend all your money at once buying the stock, but dollar cost average into that. And this is also a lesson right here. If you're going to continue to buy a company, make sure it's a high quality company. Always do your own research, or else you could end up with a bag, holding a bag like this. So yeah, definitely don't be on margin. So then you're holding your own bag and the other bag. So. Yeah, also, I'll show you my year-to-date performance in here. Luckily, if you're going to be a stock picker, you want to hopefully outperform the market. And year-to-date, this is crazy. Year-to-date, we're up 29% versus the S&P 500 up 7%. And that's been our better performer, because in year-to-date here, we're up 8.6% year-to-date in my main taxable account right here. Wow, the overnight market is going nuts. Yo, hopefully stocks are going to continue to keep up this green tomorrow morning. So it looks like tomorrow morning is going to be a green day. So that's great news. Every stock in here is green so far. So yeah, lots of new questionable practices found out about UHC, or is that United Healthcare? Yeah, about like charging. I read into that. Yeah, it's not good. So yeah, and if UNH gets accused of fraud, they'll get kicked out of Medicare and Medicaid for 5 years. And I think that's really why United Health has tanked recently. Look, like all the dominoes have fallen since then. Like Elevance was the next one to fall. Look at this one. They do the same thing United Healthcare does, and they also just had an awful week. I mean, just terrible. And CNC as well. There's another healthcare one, CNC. It's just absolute tank because of the government regulation, basically because of UNH. And honestly, CNC might be a decent time to nibble on this one too. I mean, look, stock fell, and then it just falls another 10 days in a row. I mean, could go lower for sure, but shoot. How low can they go? Took profits on open at $2, bought 10,065 each. Hey, that's nice, Caspa. That's awesome, man. So yeah, let's keep going here. Someone said normal KO. So yeah, I own the bottling company. Hey, y'all hear the news that they want to bring back the cane sugar to a Coca-Cola? I feel like that's going to help drive sales. But you know what? Let me go to Warren Buffett's portfolio because that's a Warren Buffett stock, of course. So yeah, obviously these are super investors like Warren Buffett, Nancy Pelosi. Like Nancy Pelosi, for example, literally by SEC law, she has to make all of her trades public by the SEC, so we can see every stock that she trades and stuff. And also Warren Buffett, these super investors with over $100 million net worth, got to make everything public. And we can see Warren Buffett's top 10 holdings, Apple, Bank of America, a lot of these higher yielding names. And then he has Coca-Cola stock. So this is a great dividend buy and hold for the long run stock. You get a 3% dividend here nearly. Look at that. 2.8% dividend. And then they're also doing buybacks. They buy back like 2% as well as the company was. So you're getting like a 5% plus total shareholder return with Coca-Cola. I just love them. I mean, we can see the net income right here. They've been performing a lot better than Pepsi, for example. But yeah, look at this. They're making $2-3 billion of net income every quarter. Gotta go. Good night, man. Subbed. Yo, Caspa, dude. Thanks so much, man. I hope you have a great night, man. Have a great Sunday. Thanks for showing up here, man. Thanks for all the donations and super chats. I really appreciate you, man. Thank you so much, Caspa. Yeah, by the way, if y'all want to hit the subscribe button, we go live every Sunday, this exact same time. We also do some other live streams during the week. And by the way, I sell nothing. I don't have a course book, Discord, WhatsApp, Telegram. I literally sell nothing. Watch out for people impersonating me. So yeah, this is the net income they're making. Coca-Cola, just like a perfect dividend buy and hold for the long run stock. Yeah, here's all his other. How's he performing versus the S&P? He's been underperforming the S&P. Not Berkshire Hathaway, but his individual portfolio. So yeah, Warren Buffett's portfolio is interesting. He gets a lot of dividends. So, all right, let's see. HNST, is that? Yeah, that's the Honest Company, HNST. There was another stock I just wanted to look at, but I forgot. You know what? Hopefully I'll remember after this. So here's the Honest Company, and this is a very small company, very small market cap. Look in the top right, $507 million company. So first off, $507 million company. And I know they have no debt. So debt-free with $78 million of cash. So let's see, 18% of their market cap is just their cash on hand. So first off, great balance sheet, no chance of bankruptcy here. But I think the stock hasn't been performing too well. They're struggling to get net income positive. Like if you look at the revenue, it's up 12%. And the net income, this is why I do like them. They made $3 million this quarter, which is great news. You know, if you kind of average it out, they're barely net income positive. But yeah, they need to keep up this trend of hopefully making a couple mil every quarter. They basically sell healthy diapers and wipes. Like here, if I scroll back, oh wait, hold on, let me go back to here. So yeah, diapers and wipes are most of their revenue. Skin and personal care products, household and wellness. So yeah, they just sell some commodities, but like a healthy version. So, oh yeah, the junk food stocks, PepsiCo versus Coca-Cola. We saw Coca-Cola was pretty close to an all-time high. Pepsi, before Monday or Thursday, before they reported earnings, this company was struggling bad. You know, Pepsi, this one has a really nice yield as well. 3.83% dividend yield on Pepsi. So, yeah, you get a nice chunk of your money back just through dividends on Pepsi. So, I think Litecoin is going to run from the crypto bull. So yeah, Litecoin, mainly people use this, and a lot of people sometimes pay. Whenever I want payment through crypto, I always ask for Litecoin. Crypto, basically this is like, you're in and out of this coin usually. It's not really one you see people buy and hold for the long run. It's like more utility. super low transaction fee. You get paid something, you sell it. This one has definitely underperformed. Like, look, Bitcoin since 2021 has like 5x'd. Litecoin has done nothing. So I don't know if I'd choose Litecoin over Bitcoin, but yeah. By the way, I don't really have an opinion on crypto. I don't own any crypto. I kind of wish I did. Bitcoin's at all-time highs, but yeah, I don't really own any crypto. I mainly just love tech stocks. A lot of junk food stocks are doing well recently. Yeah, Richard, like, look at General Mills. This is actually one that I think, I've looked at all the healthcare stocks like Hershey's, Mondelez. I think General Mills is actually like one of the best buys right now. And first off, it's because of the dividend payout ratio. So look, you get a 5% dividend, a higher yield than Pepsi, and the payout ratio is lower. So the dividend's safer. So Pepsi has like an 80% payout ratio. General Mills has only a 56 and a higher yield. So here's what General Mills does. They own a lot of popular brands you've probably heard of before, like Pillsbury Dough, Cinnamon Toast Crunch. Well, look at this. Snacks is 21% of the revenue. I love how diversified that it is. Cereal, 15% of the revenue. Then convenient meals, pet. So they're in the pet food industry. Dough with the Pillsbury Dough, baking mixes, ingredients. So yeah, I love how diversified the revenue streams are. So yeah, that's General Mills. Yeah, the net income has fallen 50% year over year, but still they're making a couple $100 million every quarter. Dividend seems safe. So yeah. Problem without smart contracts is those coins don't have supply cap. Oh, hey, what's really cool, the proof of stake coins are really cool. Like if I go to Robinhood right here, this is a new feature, and this is going to make Robinhood some money, but I didn't know this. And I love dividend paying stocks, and some crypto to an extent kind of pays you a dividend. Like Solana, you get a 7% APY, and just Ethereum, if you own Ethereum, you get a 2.7% APY when you stake it. So that's really interesting, some of these coins there. And I used to stake some coins as well. I don't really no, I don't got much, or I don't got really any crypto anymore. Heinz is way down also. Yeah, man. I actually think, Kraft Heinz is doing something I think is pretty smart. So they own a few brands that are high margin. Like, you wouldn't believe it, but like the Kraft mac and cheese, the Lunchables, Capri Sun. Actually, Lunchables has seen some good growth. But they're splitting off the business. They're selling a lot of the low margin crap away from the good business so it can trade at a higher multiple separately. So either way, this is going to be great for the company. You're still going to own both assets through different stocks, but hopefully one of them is going to trade at a higher multiple than before. So here's Kraft Heinz right here. That's kind of why they've been doing that's kind of why they gapped up right here on the split off news. But the dividend is crazy here, a 5.8% dividend. So you're mainly buying this for the dividend here. And let's see. What about net income? So yeah, the net income does get a little choppy here, but basically they're making 1.2, or they should be making $1 billion of net income every quarter when you kind of take out taxes from operating profits. So yeah, they're making $1 billion a quarter before all the one-time adjustments, and there's a lot of them. So yeah, here's one, NWBI dividend play. NWBI. We'll check it out. So Northwest Bank share. So this must be a bank, yeah. So check this out. The stock, well, this isn't good. So the stock is down bad still since 2019. So the stock hasn't outperformed the market, but let's see the dividend. So you're probably buying the stock to maximize your dividend income, and yeah. So look at this. You get a 6% dividend. The payout ratio does say 101%. Are they this might be a BDC, but it says bank. Yeah, banking. So let's see net income right here. So yeah, the payout ratio is actually probably lower. Looks like they had a little one-time adjustment to their net income. So yeah, normally this company is making like 40 million of net income every quarter. So yeah. So I don't know about this one. You're not going to probably outperform the market in the long run, but you do get the nice dividend there. That's interesting. What is the name of your YouTube channel? Hey, Donnie. Hey, yeah, my YouTube channel is called Nathan Robert. I'm streaming on it right now. Yeah, hey, y'all want to hit the subscribe button? I'd appreciate that. YouTube channel is called Nathan Robert. I make YouTube videos. Hey, we stream. I try to stream every day. We do the same stream every Sunday. Sundays are usually the most popular streams. Every Sunday, the same time. Hey, we've been streaming for 2 hours and 30 minutes. I appreciate y'all being here. We'll probably stream for a little another 10, 20 minutes. Yeah, if you guys got any last minute stocks you want me to look at, let me know. We'll for sure check them out here. Let's see. I don't think Bitcoin has any actual competitors in the space. Uh, yeah, yeah. Oh, I wish I had the screenshot still. I think it was like 19% of Bitcoin is all supposedly lost or just been on inactive accounts for since inception. So a lot of Bitcoin's been lost. It's so Bitcoin's so unique. Um, Trump is gonna tariff Mexico tomatoes 30%. Really? That's interesting. Yeah, that might not be good for Kraft Heinz. CONY and Mary are the best dividend stocks. Yeah, these are the covered call yield max ETFs. So yeah, you definitely are buying this to maximize your dividend income because you're not going to outperform the market. Like this, Coney, is this a covered calls on Bitcoin or Coinbase? So yeah, Coinbase moves with crypto. So basically, Coney sells covered calls on Bitcoin, and that hasn't been the move recently because Bitcoin's at all-time highs. You shouldn't really be selling calls on it, but because Bitcoin's so growthy, you get a crazy dividend. So if we go to or you get crazy premiums when you sell calls. So yeah, the dividend yield says 110%. You get 110% dividend yield here. You get paid monthly, but yeah, you're probably not going to outperform Bitcoin or the market in the long run. You basically just buy that to maximize your income. You stream any other days as well? Yeah, Richard, I try to stream at least every other day. So at very least, we're streaming a couple times a week, but every Sunday, this exact time. But yeah, so here MSTY as well. This is MicroStrategy. Basically sells calls on Bitcoin as well. Sells calls on MSTR. So yeah, this one as well isn't at all-time highs when Bitcoin is. But let me pull up MSTR. So MicroStrategy, this is such a cool. So yeah, here's actual MicroStrategy stocks at an all-time high. We can see the ETFs that hold them. Yeah, MSTY, third largest ETF that holds them. So yeah, MSTY is not at an all-time high. Obviously because it's selling calls on it. But let's go look at that's MSTY. I want to go to MSTR. I want to show you the balance sheet on this company. So this company like prints Bitcoin. So basically look at the balance sheet right here. They had 6 billion of assets last year. Now it's 43 billion. This company was able to dilute the shareholder by literally $30 billion, issue cash, and then with all the cash they issued, just buy Bitcoin. So this is one of the largest holders of Bitcoin. So basically, yeah, this moves with Bitcoin. So that's MicroStrategy. They changed their name from MicroStrategy to Strategy. Did anyone else notice that? That's really, really interesting. So yeah, here, let me check out the portfolio really quickly. We'll see how the market's moving right now. So 0.21% up. What about the S&P? Yeah, here's Tesla and the QQQs. Qs are at 0.2% right now. So yeah, that's interesting. Also, Netflix. Yeah, we might look at Netflix again. And here's kind of the small caps I've been buying in here. This is my Roth IRA right here. So I wanted to pull up my Roth IRA because we were talking about these monthly paying dividend stocks. This is one of my favorite high yielding plays. This is ticker symbol MAIN, Main Street Capital. And if you're looking for a higher yielding dividend play, this is probably one for you. So Main Street Capital actually has a 5% dividend yield, and they're one of the few stocks that pay you monthly. So if you buy Main Street Capital, you actually get a dividend every single month. And they've been making so much money recently that they're sometimes paying you twice in 1 month. They're doing special dividends. Last month, they paid you an extra 30 cents a share, and they can easily afford that. So this is going to sound complicated, but basically their dividend cost 78 cents a quarter from their EPS. And as we can see, their EPS every quarter is well over $1. So they can easily afford to be paying these monthly dividends and can easily afford to be paying the special dividends as well. So yeah, look at that. In net income, I'll just keep it simple. In the most recent quarter, they made 116 million of net income. So 116 million of net income, and the dividend only cost 83 million. So yeah, they're a BDC. They're one of the few companies that have to, by law, pay out most of their taxable income in the form of a dividend, so that really high dividend yield and monthly payments are actually sustainable because they have to do that by law. They're one of the few companies. Litecoin at 117 will catch on. I had almost 20 years to catch on. Hey, yeah. Yeah, crypto, man. Actually, what's Bitcoin at real quick? Yeah, Bitcoin, $117,000 right now. I mean, I missed out on Bitcoin. Like, this has been one of the best performing assets. So luckily, I own Robinhood stock and SoFi. Robinhood, they kind of move with crypto. But yeah. So let's see here. We go back over here. Someone said Reddit stock. I do own Reddit, by the way, and this is another incredible balance sheet company. I believe this is a $200 stock. Actually, this is crazy for Reddit. So here's what you're buying. First off, extremely growthy company. Look at the sales. I mean, the sales are up 62% year over year. The sales just hit a new record. So first off, extremely growthy company in terms of sales. But look at the balance sheet. This is a monster balance sheet. Their assets are at a record. And look at the cash on hand. It's on the left. They have $1.95 billion of cash and absolutely no debt. Here, I'll show you that. So, and look at the total debt. Total debt says zero because they literally have no debt. They're making EPS, so they're net income positive. Lots of cash. So Reddit, I think the risk to reward, a lot of people think Reddit's a meme stock, kind of like Hims. We'll look at that one too. But Reddit, good fundamentals, no bankruptcy risk, $2 billion of cash. And they make net income every quarter, so they're not burning their cash pile. Like they could go buy a company if they wanted to. They're adding to their net income every quarter. So let's go look at Hims as well, because there's been some interesting news about this stock. If you look at Hims right here, if you're wondering why did the stock gap down this day, what happened? Well, basically this company used to sell a weight loss prescription. Hims used to sell Ozempic. It was literally Ozempic. They literally sold Ozempic on their website, and then NVO, the creator of Ozempic, dropped them as a partner. And the stock really fell after that. So that's weird. I am curious how that'll affect their future growth. But for right now, this is why Hims is not a meme stock right now. They're a super growthy company. The revenue is literally more than doubled. It's up 110% from the previous year. So extremely nice revenue growth. And the financials here too. The FCF, which stands for free cash flow, they're making like 50 mil plus a free cash flow a quarter. Net income as well. Printed net income, and they have no debt. Yo, they're in my debt-free watch list. If anyone wants to see this, you can like pause or rewind the stream. Every stock in here has no debt. Instacart, DocuSign, Duolingo, Pinterest, Opera GX browser. Actually, I want to look at this stock. Zoom, Reddit, Yelp, all debt-free companies. And let me look at... I see ads for this all the time, and I never download it because I'm a Google Chrome user. But has anyone seen the Opera GX browser? There's ads for it. Well, they're actually publicly traded, and they actually have decent fundamentals. First off, very small company, a $1.6 billion company, so very small market cap. But look at this. They're making 10 or more like 20 million of net income every quarter. Plus, I said they're debt-free. I mean, look at this absolute beast of a balance sheet. No debt. Lots of cash, making net income every quarter. So yeah, that's Opera GX browser. Oh, let's see here. XRP is doing pretty well with retail now. How are you showing your screen live? Yeah, I'm on an Apple TV. I'm streaming on my computer right now. Here's my mouse right here. But yeah, I'm streaming on my computer with OBS after Apple playing. But yeah, what up, Karen's? Karen's gone wild. What's up, man? Hope you're having a good Sunday. So let's see. Applesauce too. What's up? Let's see. How are you this week? Can we look at MVST? Yeah, Microvast. Yeah, so MVST, this company is just beating every analyst expectation, and that's really why the stock is gapped up so much. This actually company was priced for bankruptcy. Like before that huge rally, like look at the stock. They were at all-time lows. So now they're actually making net income, removed all bankruptcy risk. So check this out. This is what the analysts were expecting. The orange line is what the analysts expect, and they actually made net income. Analysts were expecting them to lose net income, and then they made 20 cents of EPS. Same with EBITDA. They were expected to lose 5 million of EBITDA, but they made 20 million. So they beat expectations like crazy. And look in the most recent quarter, they actually made 61 million of net income. I mean, that's really good. What was the revenue? Revenue grew 43%, so they're finally growing again. They've been growing, but they're profitably growing. Their revenue's up 43. They made net income on that, and that wasn't like a one-time adjustment. They really made net income there. So great news for Microvast. Really beat expectations there. So yeah. Here we go. I think Warren Buffett just bought this stock. Let me actually go check this out. What up, John? Hope you're having a good Sunday. Let me go to Warren Buffett's portfolio. Warren Buffett Q1 buys. Warren Buffett also just bought Amazon, by the way. So as you know, Warren Buffett, super investor, has to reveal all his purchases. And check this out. He just bought Amazon, and he bought SIRI, Sirius XM. Probably because the valuation looks pretty fair here. I mean, they're pretty much at an all-time low. Not too great of a stock price. What's the market cap? So an $8 billion company. Well, let's go see how they're doing. So yeah, Sirius XM. What is like? I've heard this a million times. Like only on Sirius XM. Is that like a radio? I don't know what this is. Sirius XM. It might be like a satellite TV provider, something like that. But let's see, how is this doing? So yeah, this is not really, it's not a growing business. That explains the stock price. I mean, look at this, the Sirius XM revenue. Like, look at these red year-over-year declines. So the business isn't growing. What about, like, look at the stock. That kind of explains it. Net income here. Luckily for them, they are making net income every quarter. Yeah, so they lost $3 billion that one quarter, but that was some one-time adjustment because ever since then they're making like $200 million of net income a quarter. So this is an interesting company. They have a 4.0, so it's probably like a value play. You know, you get a 4.5. They're like a Comcast, dude. I'd rather buy Comcast. Another business that's slowly going away. Oh yeah, hey, thanks, Donnie. Yeah, satellite radio. So CMCSA Comcast, you know, I'd rather buy them. To be honest with you, what's the yield on here? So yeah, this one has another really good yield, a 3.65% dividend, and the payout ratio is only a 30%. So if they, I like to sometimes assume they max out the dividend payout ratio. If they maxed out their dividend payout ratio, you'd get over a 10% dividend. So first off, the net income multiple, yeah, is an 8.5. They're trading at 8.5 times net income. This dog cheap of a valuation, and that's because the business really isn't growing anywhere. Like, look, residential connectivity business, it's just probably slowly going to keep on going down by a couple percent every year. But then they're trying to reinvest in these other businesses like Universal Studios, you've maybe heard of before. They own some theme parks. So how's their media business doing? Media business up 1%. Like they own Universal Studios, which is like Despicable Me. The Despicable Me series. They own a bunch of other assets as well. They're trying to diversify. So I like Comcast is a better play, although probably neither of these will outperform the market in the long run. Everyone said boomer stocks. Yeah. So yeah, Comcast, they're still making $3-4 billion a quarter. So I'd probably rather pick Comcast than the Sirius XM. But Warren Buffett did just buy Sirius XM. Maybe the risk to reward looks good on that one. 5% yield. They are making a couple $100 million a quarter, but again, the business is like slowly declining. I'm probably saying this name wrong, but Eunice, how's it going, man? Eunice, how's it going? Hope you're having a good Sunday. Let's see. Wow, I sold Sirius satellite radio when I worked at Radio Shack. Where did I have the youth even know? I'm probably just not too well informed. Yeah, I guess. Satellite radio. People just use Spotify, YouTube. I mean, streaming services have really taken over. It's kind of crazy. Like whenever I go in my car, man, I don't. I never listen to the radio. I Bluetooth my phone and listen to my own stuff. They also own Pandora's Box. I think SIRI. I'll be quick about this as well because who cares at this point. But yes, Pandora, I think it's like a music platform streaming service that also unfortunately isn't growing. I mean, it's down 1.6% year over year. So yeah, let's see. Market going up or down. What up, Hank? Let's see. We'll go check real quick. What stocks are moving? So Calmain is up 3.6%. That's the egg stock, largest egg producer. What's down today? UiPath, that's our big loser. We're down 40% of them. I just like being fully transparent, you know. All time in this portfolio, we're only up 15% all time in here, which has underperformed the market. For the amount of years that I've had this portfolio, we've definitely underperformed, but we do got some good winners in here. But yeah, Calmain, Futu's up right now. Yo, Futu is like, I wish I promoted this stock more because of how much I love them. They're actually the only Chinese stock that I own. Actually, there's one more Chinese stock that I want to talk about. If anyone's into like gaming companies, has anyone heard of Tencent before? If this was an American company, they'd be a Mag 7. So this company right here, they own League of Legends, Riot Games, Valorant. They own Supercell. So if you heard of Clash of Clans, Clash Royale, they own Supercell. They own 50% of Fortnite. So they own half of Fortnite. They own PUBG. I mean, this is a monster Chinese stock, and I'm looking to buy into them. Wanted to share that with you guys. But even though they're Chinese, I love their assets. And if we go to the net income, I mean, this is in US dollars. They're making 7 billion of net income every quarter. So I bought DCTH 100 shares after the video. Hey, you know what? I'll go look at DCTH one more time because we're coming up on the end of the stream here. This is, yeah, hey, thanks for watching my most recent YouTube video. Yeah, if y'all want to learn more about why I bought this stock I'm about to go over, go check out my most recent YouTube video. It's called 3 Stocks That I'm Buying Now. It's just literally my most recent YouTube video. So hold on. If we pull up my Robinhood account, there we go. So it's in my Roth IRA. We literally just started this. It's only a $1,400 portfolio. Made it just over a year ago. But DCTH is a hidden gem small cap that I think the risk to reward just looks insanely good on this company. So I'll explain it kind of just logically here. So here's the valuation you're buying in at. So this whole company is worth $390 million. So remember that the whole company is worth $390 million, and they have no debt and $59 million of cash. So first off, a huge chunk of their market cap is just their cash on hand, $58 million of cash, and look at their total debt. It's on the left there. They just paid off all their debt. They now have 0 debt, and because of the high interest rate environment, they're actually making cash on their interest. So, a lot of companies right now, since the high interest rate environment, are paying in negative interest. But for companies that are cash rich with no debt, they get to earn interest. So this company made $600,000 of interest in the most recent quarter. And when you're a $400 million company, that's pretty significant. And they're super growthy. So first off, financials are at a record. They used to make $300,000, nothing. Now it's 19 million, it's up 530%. So with this growth rate, what's it going to be this time next year? And they're making net income, $1 million. So anyway, I just think the risk reward looks pretty good on that one. Yo, I love your content recently on TikTok and YouTube. Yo, thank you so much, Plasma. Yeah, man, thanks for showing up to the YouTube stream. And Jace, hey, yeah, Jace is always showing up to the streams, man. That's awesome. Say hi to Jace for me. Thanks for showing up here. Isn't China market in big trouble? Yeah, probably. You're Jace. Oh, what's up, Plasma? Hey, good to see you, man. Happy Sunday. If you guys, Plasma, if you got any last minute stocks you want me to look at, let me know. I am about to end the stream here. This is actually my longest live stream I've ever done in my life. I've never streamed for this long before, so I do appreciate y'all. Isn't China market in big trouble? I do think so. Here's my only Chinese stock that I own. This is FUTU stock, and there's my little buy purchases. I wish I bought more of this one, but they're making so much money that they just started paying a special dividend. So check this out. They just paid right here a $2 dividend. So you got a little $2 instant return if you own the stock. But this is just such a growthy company. So if we go to the revenue right here, just look at the year-over-year growth rate. The revenue's up 81% year-over-year, literally to a new record. So revenue's up 81, but look at the net income. The net income's up 109. So this is incredible margins. They have a 45% net margin. I mean, just incredible numbers on FUTU. And if you're wondering, what is FUTU stock? Well, FUTU is actually Moomoo, and that's this app I'm on right now. So if you kind of look at the very top, you see Moomoo is the app I'm on. Well, this is their stock publicly traded. So they're kind of like a Robinhood competitor, a Weeble stock competitor. And here's what I love about them. Like we can see the stats here. They have 26 million users. And look at this, they're a brokerage, so half the revenue comes from their brokerage commissions. And this has just exploded up 114% year over year. Incredible brokerage commission growth. And another company that's making a lot of interest, 44% of the revenue comes from their interest, and that's up 53%. I mean, 260 million of interest, just ridiculous. So yeah, super growthy, lots of users, just everything growing. They're doing special dividends. Is IBM worth a gamble, I think. Let's check out IBM. So this one, I know it has a pretty nice dividend yield even now. So the stock is pretty close to all-time highs, but let's see the yield here. Yeah, a 2.4% dividend, even if you buy the stock right now at all-time highs. The payout ratio does say 100%. So I'll look into that real quick. But yeah, 2.34% dividend. Stock's at all-time highs nearly. So first off, the market has loved this stock. Congrats if you own it. You got to be up on your money. So yeah, they're a software, consulting, and infrastructure play. How's their infrastructure business? I know they're a big quantum user right now. So quantum's supposed to really help out the company. So it looks like unless this is growing, this is bad news. So, okay, good. This is up 7% year over year, but the growth isn't too great. Like the revenue's up 0.5% year over year. So single digit growth. Um, they're still making a boatload of money, basically 2 to 3 billion of net income every quarter. So they're the main quantum play. I do like IBM. I don't know about it all at all time highs, but I mean, it still has a really nice yield. The single digit growth isn't really turning me on. That's kind of weird. Is it? I I would like to see more growth, but if I go to the quantum computing watch list right here, um, it's at the bottom here, the quantum computing watch list. My favorite quantum play is obviously Google, Oracle, and then IBM. IBM's a great one. Then you have some of the more like pure plays. I would absolutely stay away from all these. Don't buy IONQ. Stay away from Qubits. The market cap is ridiculously overvalued on some of these names. So yeah, if I was going to pick a quantum name, I'd go with Google, Oracle, or IBM. I'm actually analyze Google real quick. Oh yeah, Oxy or PayPal. So you know what? We'll look at Oxy because we're already on the Warren Buffett page. So Warren Buffett's portfolio right here. He actually owns a lot of that stock. So we'll check it out. Where is this? So Oxy Petroleum, this is an oil and gas play. It's 4% of his portfolio. So 4% of Warren Buffett's portfolio is in Oxy Petroleum. So yeah, this one's kind of been struggling on the 5-year just because they're a commodity stock. But let's see the metrics here. So, I like this right here. So we can see their realized price by oil, net sales volume per day. They're selling 1.39 thousand a day. Okay. So oil and gas is most of the revenue in chemicals. So yeah, oil and gas and chemical play. Most of the revenue comes from the U.S. What about net income? So yeah, look at that. Little one-time adjustment last quarter, but they're literally making over $1 billion of net income every quarter. So I love the net income positivity here. So yeah, Berkshire Hathaway, obviously the largest shareholder here. So yeah, it's kind of like a Buffett-backed oil and gas play. So yeah, Warren Buffett loves really helping out the management. Same with Berkshire Hathaway. They really go help with the management team. Is the market having an issue from the Trump trade? It looks like it. I mean, but I think the market right now is just so tired of everything. I mean, the market's like we keep threatening other countries with crazy tariffs, but I think the market's at a point where like until the tariffs and the policy actually goes into place, let's not price it in too much. So yeah, S&P's nearly at all-time highs. So for right now, there hasn't been too much of an issue because market's pretty much at all-time highs. But let's go look at PayPal real quick, dude. PayPal, actually, I want to look at this stock over here. So because I want to show you the stock buybacks that they're doing. PayPal literally spends all their money buying back their own stock. They might even spend more than they make on buybacks. So basically, here's the net income right here. Bottom line is they make just over $1 billion of net income a quarter. So PayPal makes just over $1 billion in net income a quarter. And what are they doing with all that money? Well, look at this. Yeah, that's more than they're making, but that's why the stock has done so good. Or well, they're spending over $1 billion every quarter buying back their own stock. So they're spending more in buybacks than they make in net income. So if you go to the total common shares outstanding, look in the very bottom left. There's right now 979 million shares that exist, down 7% year over year. So you literally own 7% more the company than you did 1 year ago. So basically, how that works is there's 7% less shares. So there's the EPS, the net income per share. There's less shares for the net income to be spread out to. So basically, you get a 7% more ownership in the company, but this one's struggling with growth right now. I almost wish, like you see how PayPal's spending, they have $1 billion a quarter to mess with. Instead of spending $1 billion a quarter buying back their own stock, maybe try and go buy a company or bring back some growth. Because look at this, the revenue on PayPal is only up 1.1% year over year. That's not any growth really. And that's why the PE is so low. The PE ratio on the left is a 15. So they're trading at a 15 commodity PE because the growth is really slowed. But that's a huge buyback play, and I actually like PayPal. So that's one I would buy because they have the ability to reinvest. I think PayPal risk reward is pretty decent on that one, I will say. Yo, STG, what's up, man? Hey, yo, what's up, man? He said IBM can consolidate at these levels. Quantum is far out. Divs for the next 5 years. Yeah, quantum is pretty far. Yeah, let me go back to Google right here. It's like, obviously, IBM, Google, these aren't pure play quantum stocks. Like that'll probably be a very small revenue a very small percent of the revenue in the future. But these companies, IBM, Google, they have the money and the talent to be the industry leaders for these industries. And, obviously Alphabet, Google, this is kind of like an ETF in one. Google owns so many assets. Google owns Android. Google owns YouTube. And look at the PE. The PE is a 20. So Mag 7 stock, dog cheap valuation. This is a perfect buy and hold forever stock. You also get a small dividend here, 0.5% yield. But yeah, they're trading at a 20 PE, 20 times net income multiple. Oh yeah, they're in the Google Cloud business. They own Waymo, if anyone's heard of Waymo before. Look at just the Google Cloud revenue, $43 billion for the full year, hits a new record every quarter. So Google's just such an innovative stock, and they're also growing their margins. Like the revenue is up 12%, so their total revenue grew 12%, but their profits grew by 45%. So another company that's expanding their net margins, 38% net margin. So, and Google also reports earnings this week. If we go to the earnings hub here, it's actually a pretty active week. We get Tesla, Coca-Cola. It's one day right here. Yeah, Wednesday, man. Wednesday is going to be the day because we get Google and Tesla this day. Anything else on this day? We'll look right here. Dude, my Wi-Fi is terrible right now. I don't know. IBM. So, whoa, hold on. Dude, Wednesday's going to be popping. We get Google, Tesla, T-Mobile, IBM, AT&T, NextEra Energy, largest utility, Moody's, Fiserv, Amphenol Group. Bro, Amphenol Group, this is one of my largest holdings, bro. I bought the dip on this stock right here. And because of Nvidia, dude, Nvidia ordered a bunch of copper cables from Amphenol Group. And basically anything Nvidia right now, this stock's going to hit an all-time high. So basically, this stock's at an all-time high. They're reporting earnings on Wednesday. Chipotle, United Rentals as well. Dude, I can't believe it. Like a lot of my portfolio reports on Wednesday, man. United Rentals as well. Dude, this is another one that's one of my main holdings. I never talk about this stock because no one's really heard about it, but United Rentals is one of my largest holdings in here. I have 5 shares worth $4,000, and this is another great dividend growth company. Actually, let me pull up United Rentals over here. So this is another insane buyback company. Let me show you this right here. So United Rentals, if you look at the net income right here, they make $500 million. Actually, they had a one-time adjustment. You see how the net income fell 4%? It's actually because they paid a $60 million fee for not being able to acquire a company. But hey, what up, Indar? How's it going, brother? Hope you're having a good Sunday. Yeah, if you guys got any last minute stocks you want me to look at, let me know. I'll check them out. So basically, United Rentals making $600 million of net income a quarter. What is United Rentals doing with $600 million a quarter? Well, first off, their dividend is super low. Their dividend only cost $100 million. So very low dividend cost. So United Rentals, look at this. This is the main best part. United Rentals spends a couple $100 million every quarter buying back their own stock. So there's less shares that exist. They're spending 3x more on buybacks than they are on their dividends. So if we go to the total common shares outstanding, you own 3% more of the company than you did 1 year ago. Their shares outstanding just goes down every quarter. So United Rentals is another one that reports earnings on Wednesday. That's got to be it. Rollins, I can't believe the stock price appreciation of this company. This is a company that just sells bug spray. They have the number 1 market share for bug spray, cockroach, cockroach repellent, but rat traps and stuff. So this is actually a really interesting company. With the fundamentals aren't really growing, but they have such a strong moat. Rollins is interesting. I potentially want to buy them. So let's keep looking at the chat here. I didn't read these stocks. I'm looking at a few, but don't really like the risk to reward of buying at all-time highs. PayPal, Astera Labs are best 2 right now. Yeah, Astera Labs. Let me go check out A-Lab again. This is one on my watch list as well. I really like Astera Labs, ALAB right here, and here's why. I love growthy companies. If you're looking for a stock to buy and hold forever, buy and hold for the long run, you want to make sure it's a growthy name. You don't want to buy a 3M or I don't know, something low growth, but this one looks really growthy. The revenue is up 145% from the previous year. So revenue is up 145%. Also, absolute fortress of a balance sheet right here. No debt at all. no debt on this company, lots of assets, lots of cash on hand. And let's see, so revenue up 144% year over year. And they also made net income on that. They made 31 million of net income. So I love the growth. I love the profitability. I love the balance sheet. I mean, that's a monster of a balance sheet right there. And the cash from operations looks good. So yeah, the ALAB is on my watch list. I do really like them. Oh yeah, and Coke as well. Hey, yeah, Coke. This is my most recent purchase, actually. I actually bought a share last week of this stock. I don't know if y'all heard the news. Coca-Cola switching from high fructose corn syrup to cane sugar. I feel like that's going to bring a lot of demand. I feel like a lot of people will want to try out the new Coca-Colas. So anyway, here's the stock right here. All these buy orders, that's where I've been buying the dip. So as you can see, I've been slowly buying into this stock right here like crazy. And here's one thing a lot of people don't realize, and I'll be quick about this. Look at the dividend yield versus the payout ratio. So it's kind of easy to remember. They have a 0.5% dividend yield and the payout ratio is a 5%. So just kind of remember that right there. Just remember that. They have a 0.5% dividend yield with a 5% payout ratio. Let me pull up Apple real quick. AAPL. Look at their dividend. They have a lower dividend, an under 0.5% dividend, and the payout ratio is 3 times higher. So Apple has a 16% payout ratio for a lower yield. So that's just kind of one thing I like to point out. You get the valuation is just so good on this company. I really like the risk to reward here. So Coca-Cola Consolidated has just been one I've been loading the boat on. The reason the stock fell so much is because of earnings, and the earnings really, they kind of had this one-time adjustment right here. If we look at the net income, it fell, whereas it's 37% year over year. Yeah, so the net income fell 37%. That was because there was a couple fewer days of selling days, and one of those days was a huge holiday. I think it might have been Easter. I don't remember. But anyway, I've looked into them. I think the risk to reward actually looks very good on Coca-Cola Consolidated. They're also Wait, hold on. I got to show you this real quick. So, as you guys know, I love buying stocks that buy back their own stock like crazy. And if we go back to Coca-Cola Consolidated right here, dang man, come on, phone. Can we load here? All right, let me go back to here. Where was Coca-Cola Consolidated? So, here's my never sell watch list. Man, Ferrari stock, I love them. So here's Coca-Cola Consolidated, $9.8 billion company. This isn't the main Coca-Cola. This is the bottling company. But look at this right here. They're also an insane buyback company. The whole company is worth $9 billion. And that one quarter, a couple quarters ago, they literally spent $500 million buying back their own stock. So if you go to the total common shares outstanding, you own 7% more of the company than you did a year ago. So you own 7% more shares than the previous year. So that's another huge buyback play. Hey, what up? Zaid said Intel stock. So yeah, this one has been struggling like crazy. I'm going to type it in the chat myself so I don't forget. I want to look at Taiwan Semi as well because someone's been saying that a few times. So here's Taiwan Semi and Intel. Intel has been struggling. So if we look at them on the monthly, did you know Intel is the exact same price that it was back in 1998? So if you bought Intel in 1998, you're actually down on your money, which is just nuts. So here's kind of why people like them. They have a huge GPU market share that is declining. Like last year, they had a 66% PC GPU market share. Now Intel has only a 63% GPU market share. So the market share has kind of collapsed. But here's the bad news. I mean, they're just losing a lot of money. Like look at the FCF, which stands for free cash flow. They're burning literally a couple billion of free cash flow every quarter. So that's really unfortunate for Intel. And the net income doesn't look any better. I don't know how this is possible, but they lost $17 billion that one quarter. So anyway, we just want to see this one. Like the numbers have always just been really choppy here. So we just want to see Intel hopefully get back to net income positivity, just make some sort of profits, but they're burning free cash flow, they're burning net income. And when we compare that to a Taiwan Semi, I mean, dude, I'm actually surprised. Taiwan Semi, I don't know how they fell 2% on Friday. This is probably $275 stock right now. I don't know why Taiwan Semi isn't doing better. Also, I'll show you this right here. First off, a 25 PE. Like this could stretch up to a 28 PE, 29 PE, and it still would be reasonable. Like no one's really gonna panic sell out of Taiwan Semi at a 28 PE. But here's their market share. They make those 5 nanometer wafer chips. They're used in everything, like your window in your car, your washing machine. Like they have a huge market share, 67% market share. But check this out right here. The net income is the best part, and the margin growth. So first off, total revenue grew 55%. But the net income grew 80%. So here's a company growing their margins. This is ridiculous. Taiwan Semi has over 40% net margins, and the net income is literally over 10 billion a quarter. Look at this. For the past 4 quarters, the net income is well over 10 billion in net income every quarter. So incredible numbers here. So yeah, they're a $1.25 trillion company with 40% net margins. Oh, and you get a 1% dividend. I forgot to show you that, but the dividend yield is over a 1%. So I almost wish I bought them instead of AMD. I do own some AMD as well. Let me pull this up real quick. AMD stock. Yeah, we got 12.83 shares of AMD. We're up 27% on them. Hey, what up, Honest? He said Google is $200 after earnings. Yeah, hey, that's interesting to watch this week. Google does report earnings. Hey, you know what? I keep showing the buybacks of every company. Here's something really cool about Google. I think you'll find this interesting. So check this out. Look at the net income. Just in the most recent quarter, they made $34 billion. But let's just route it out. Let's say they make $30 billion a quarter. So of after-tax net income. So first off, ridiculous. But a net income, after-tax net income, let's just say Google's making $30 billion a quarter. The dividend only cost $2.4 billion. So what the heck is Google doing with all this extra money? Well, check this out, guys. Google literally spends $15 billion every quarter buying back their own stock. So another insanely buyback-friendly company. Google spends $15 billion every quarter buying back their own stock. They return money to you in a dividend. And look at their total debt right here. They have total debt of $13 billion. I mean, they spent $15 billion buying back their own stock. And look, cash on hand of $93 billion. So Google has like $80 billion of net cash. They're buying back their own stock like crazy. They just bought Wiz for $30 billion. Google's just so innovative, man. I mean, crazy. Yeah. Oh, here, what up, Healing? So he said AMD is going to dominate the inference market. It's already eating Nvidia's lunch. Here, let me actually pull up AMD. I do own them. Again, I might be biased. So again, none of this is financial advice. I'm not an expert. I'm literally a college student. I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. But here's AMD right here. And honestly, they're gapped up on this news that they can finally ship their chips to China. So that's a huge earnings tailwind. Nvidia as well. Nvidia, AMD, they just got permission to finally ship their chips to China, which is great news. And they sell GPUs. They have a really big market share. Check that out. A 17% PC GPU market share. So really good market share. But AMD is really a data center play, in my opinion, because check this out. Half of their revenue comes from their data center. So if any other company makes a data center, they need GPUs for the data center. And guess what? AMD they don't have to pay anyone. Sorry about that. Yeah, AMD just makes their own chips and installs them themselves in the data centers. I mean, it's perfect. There's no middleman. So data center industry is perfect for AMD. It's up. The revenue is up 58% year over year. So very solid growth. Like, look at the free cash flow. $700 million of free cash flow just this quarter, up 91%. Net income's just as good, up 5x. Net income $700 million. And they have a monster balance sheet right here. AMD has no net debt. Look at his balance sheet. So AMD is one I like. It's just a buy and hold stock. You just buy and hold it for the long run. Don't really worry about it. Yeah. So AMD data center GPU play, is ALAB competition for Nvidia and AMD? Not exactly. No. I mean, to an extent, but not really. But I do really like ALAB. We'll check that one out. But Honest said, AMD, by the way, is no longer Advanced Money Destroyer. I kept hearing that whenever I mention AMD, like AMD Advanced Money Destroyer. Now they're Advanced Money Duplicator. I don't know. But they have for sure underperformed the market, or especially Nvidia. Nvidia is at an all-time high right now. Look at it. Look at AMD. They're still 30-40% off all-time highs. But since the April bottom, they've been crushing it. So I do own them. I might be biased, but Honest said, can we look at United Healthcare? Yeah, I think this one, in my opinion, is worth a nibble. So not a full-size position. I think this industry is still going to go through some rough patches, and this could fall another 10, 20%. But I think it might be worth a nibble, like especially after these huge red candles, as of a quarter position or something. So United Healthcare, you get a nice yield when you buy the stock, a 3% dividend. So first off, you buy United Health, you're getting 3% of your money back in a qualified dividend. The PE has collapsed over here. Check this out, an 11 PE. This is kind of pricing in like for the stock to it's pricing in like the stock's going to lose half their net income, but which is kind of, if they get accused of if they get accused of fraud, which is what they're being investigated right now for fraud, they will get kicked out of Medicare and Medicaid for 5 years. And that would be really devastating toward their earnings. But look at this. We're actually a customer. We use the OptumRx business. And check this out. OptumRx has been a huge growth factor for United Healthcare. Sorry, my Wi-Fi is just not good today. But the revenue, oh, there it goes. It's up double digits. It's up 14% year over year, pretty much to a new record. So, yeah, look at the annual revenue. I mean, it's 133 billion of annual revenue for them. The United Healthcare business, UNH, that's up 6% year over year to 298 billion of revenue. So yeah, they make a bunch of premiums. But yeah, the net income, 7 billion a quarter. Again, the PE kind of expects that to go down in the future. But yeah, I like the risk reward on there as a small nibble. But yeah, we can look at ALAB as well. I wanted to also look at what's it called? APLD. So yeah, here's Astera Labs right here. I don't know exactly. Yeah, so let's see. Global semiconductor company, hardware, software solutions. So yeah. They're in a very similar industries. And so yeah, product sales, let's see how that's doing. So, oh yeah, the product sales have just been very strong. So if we go to the revenue right here, this is why I have ALAB on my watch list. Look at that. The revenue is up 144% year over year, and they made net income on that, 31 million of net income, plus this balance sheet right here. So all three of these factors, is why I like this one. Insane balance sheet, insane growth, and they're getting profitable. So another one that is kind of similar to that stock right there, I think you might like, is actually is a stock Nvidia owns. So if we go to Nvidia's portfolio right here, because Nvidia literally owns some individual companies. They own CoreWeave, ARM, and then they own APLD. So APLD just had a huge partnership with CoreWeave, and I honestly think that was kind of orchestrated by Nvidia. Nvidia owns APLD and CoreWeave, and shocker, they go into a huge partnership. And look at the momentum. It's been really strong on this one. Looks like they're kind of breaking out of this flag. But here's the thing about APLD, and again, I like showing you the numbers. This is a data center hosting company, but the main growth has come from their cloud service business. So check this out. The year-over-year growth number is 220%. So the revenue's up 220% year over year. At this growth rate, with this incredible growth rate, what's it going to be this time next year? So I just love the growth on APLD. And they are still struggling with net income, but that's okay. They'll kind of hopefully grow out of that as time goes by. So, yeah. Honest, that stock is bottoming out. He did the one earlier. Yeah, hey, so yeah, sorry if I'm repeating some stocks. So yeah, if you guys got any last minute stocks I'm going to look at, let me know. Dang, we've been streaming for 3 hours and 10 minutes. Yo, spread the wealth. Can you believe that? We've been streaming for 3 hours and 10 minutes. I hope y'all are having a great Sunday, by the way. I really appreciate y'all. And if you want to hit the subscribe button, by the way, we go live every time this Sunday. Every single Sunday, I try to do the longest streams. Try and look for some stocks we could buy next week. APLD, just an Nvidia play at this point. Yeah. Since January, they have crushed Nvidia. Yeah, so you're talking about AMD. So yeah, especially since the April bottom, like AMD's up nearly 2x. Like, look, AMD was at $76 and it went up to $150, nearly doubling. And Nvidia has done really good as well, but I don't think it's been close to a double. But yeah, I do like AMD. I do own that one, so I might be a little biased in there. Yeah, here's my main growthy portfolio, by the way. I've already kind of gone over this, but yeah, all time in here, I just like being fully transparent. We're only up 15% all time in here. Here's some of our losers like UiPath. I wonder if we go to the P&L year to date. So yeah, here's the year to date. We are up 25% year to date. Most of that from, let's see, trading P&L. I swear no other live person would show you this stuff. I just like being fully transparent. Yeah, Dave, Disney, AMD, Futu, Hood. These have been some of the better performers And then those were some of my worst performers. But we also have some dividends as well, $83 of dividends so far this year. So anyway, yeah, also, if you go to my YouTube channel, I kind of do stock portfolio updates all the time in there. Nvidia doubled since the bottom. Oh, so then they're probably right in line with Nvidia. Let me check that out, actually. NVDA. I think, yeah, I remember they were under $100. Yeah, look at that. From nearly exactly the bottom. This is 86 to 170. Wow. Incredible. So yeah, Nvidia as well. Yo, did y'all see the new Lucid partnership? Those Lucid cars are being powered by Nvidia. And here's the thing, this is a very small portion of the revenue, but they have automotive revenue. Nvidia has their own software that's kind of like a competitor to a Tesla robotaxi kind of thing. They make the software where they can autonomously drive cars. Also, they're a huge GPU play, 20% PC GPU market share. Obviously, data centers are a big chunk of their revenue. And let me see here. Oh my goodness. It was 39 billion for the fiscal first quarter here. So yeah, anyway, they print money. There's a huge earnings tailwind. They can finally ship their chips to China. They're going to be making over 20 billion of net income a quarter. So yeah, Nvidia is a great buy and hold forever play. They also, the cash from operations as well is incredible there. What do you think of Applesauce? What do you think of NVST? That is an N and not an M. It's a semiconductor company, I think. Oh, NVST. Wait, that is an N and not an M. Okay, let's see. Yeah, NVST, Invista Holdings. Okay, I haven't heard of this stock actually. So hey, let's check it out. Looks like they IPO'd right before 2019. And they have not really recovered. So this used to be a $30 stock and then they haven't recovered. But let's go check out what they do. So yeah, specialty products. Let's see. So yeah, here's probably why the business is kind of struggling. They're not really growing. Like it's actually declining, or at least this segment. It's down 2% year over year. So their specialty products and technologies down 2%. Equipment and consumables is up 0.8%. So yeah, business really isn't growing. Revenue's down 1. They're barely making any net income. Actually, if you average out the 4 quarters, they're kind of losing money. It's rough, man. There's just no growth here. So I want to see the growth come back. So I can kind of see why this one hasn't been doing too good. It's kind of been flat for a while just because they're not growing too much. Hey, that's my fault. You know what? We'll look at this one right here. Let's look at this one first. SP or SLDP. Yeah, hey, I'm probably gonna end the stream in literally 10 minutes. So if you guys got any last minute stocks, I'll check them out for you. Then I'll do a portfolio update and then wrap it up here. So appreciate y'all being here. Hope you're having a great Sunday, by the way. And next week should be really fun. Expect a green open tomorrow because if we go to the S&P 500 right here, in the overnight market. Look at that. The SPY's up. Well, not huge. SPY's up 0.10. QQQ is up 0.15. And we get crazy earnings this week. Tesla, T-Mobile, Google. We'll look at the earnings again too. But anyway, here's Solid Power. I've never heard of this stock, but very small company. A $670 million market cap. And look at that. They're up 17% the most recent day. So first off, they've been doing really good. I wonder if there was any specific earnings. Look at that. They were expecting $5 million of revenue. They made $6 million. And okay, so actually, they beat on net income like crazy. They were actually expected to lose 12 cents of EPS. They only lost 8 cents. So they're losing less net income than expected. So that's the, I guess, good news here. So yeah, look at this. Because they lose net income every quarter, look at that. They lose 20 to 30 million a quarter. That net income has to come from somewhere. So that's kind of why you see the balance sheet just decline every quarter. But no bankruptcy risk here. They have $240 million of cash and no debt. So actually, wait, hold on. $240 million of cash and the whole company is worth $676 million. So literally 30% plus of the whole entire market cap is cash on hand. So actually, I'll add them to the watch list. I mean, the growth is slow. The growth is a little slow, but a lot of their market cap is just cash on hand. So that's a good buffer, for a lot of their market cap. Hey, thanks, Jenkins. So let's see, NVTS. Yeah, hey, don't worry about it, applesauce. So yeah, Nvidia Semiconductor. Basically, there's no news for me to look at on this stock. We're here right here. Sorry. I'm all over the place. Look at this. The stock gapped up on this day because Nvidia partnered with them. There's a huge partnership with Nvidia on this day. And before that day, this company was literally priced for bankruptcy. The stock was basically $1.50 before the news, and then the news hit. So basically, you're waiting until those earnings hit because for right now, the earnings look awful. Revenue's down 39%, losing a lot of net income. But Nvidia basically just saved the company from bankruptcy with the huge partnership. They might have taken a stake in the company. I don't know. Um, so yeah. Let's see. I'm in a Tesla call and shares print me to the moon. Yeah, hey, if you go to the earnings hub right here, Wednesday is the huge day. We were looking at this earlier. So, and a lot of my stocks report on Wednesday as well. So Wednesday, check this out. We get Google, Tesla, IBM, T-Mobile, ServiceNow, AT&T, Thermo Fisher, Boston, and NextEra Energy. This is the largest utility play. They own all of Florida, Florida Power and Light, as like a utility play. Largest one, Moody's, the global. Oh, and Amphenol Group, one of my companies, Amphenol Group, the stock that is at an all-time high that I can't believe. Amphenol Group is another one. I can't wait to see what happens. And United Rentals, the same day, we get Chipotle and United Rentals down here. That's another company I own. And Hilton reports, dude, Wednesday's going to be nuts. Rollins, so that's interesting. And then we got some other earnings the next day. Let me search by my watch list right here. Yeah, Lamb Weston. Oh, Comfort Systems, my largest stock out of any holding. Comfort Systems reports earnings the next day on Thursday. So, and Coca-Cola Consolidated reports the same day. Man, this week, literally, I think half my portfolio, when I combine Google, United Rentals, Comfort Systems, and there was Amphenol, I literally think half my portfolio or close to half my portfolio reports earnings next week or this week. So that'll be very interesting to see. Bitcoin has almost no resistance until now. Low time frames is ready for all-time highs again. Yeah, you're right, spread the wealth. We get a stacked earnings week next week. So yeah, tomorrow will be fun, or then this week will be fun and a lot of volatility. So basically this week you kind of just want to chill on the sidelines. I'll probably not buy anything this week. I'll wait for Google. I'll wait for Tesla earnings. I'll wait for all that. So here's GE Veranova. Yeah, this is another nuclear play, green energy play. So if we go to GE Veranova right here, we can see, yeah, look at that. Power, wind, electrification is where the revenue comes from. Most of it from the US. Let's see net income. Let's see the profits out here. Basically, ever since the split off, GE Veranova split off from GE Aerospace and that GE Healthcare. It was genius because all these individual companies now really are focusing on their margins and improving the margins. And these companies can trade at higher multiples separately split up. So it was genius. And yeah, look at the net income they're making, a couple $100 million. You average it out, they're making a couple $100 million of net income every quarter. So GE Veranova is very cool. So yeah, guys, that's going to wrap up the Sunday stream. I really appreciate y'all being here. If you want to hit the subscribe button, we do this same stream every Sunday. I'm going to do a quick portfolio update. But yeah, if you want to hit the subscribe button, we do the stream every Sunday. And hey, please drop a like too. I sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram, literally nothing. Only thing I do have is a YouTube channel. So if you want to hit the subscribe button, I'd appreciate that. Hit the like button too. And here's my portfolio update. Happy Sunday. So here's us right here year to date. We're up 8.65% year to date. And if you have any questions on my portfolio, I'll answer all of them about any of my portfolios. So yeah, this is my dividend only paying portfolio. Every stock in here pays a dividend. All these are like S&P 500 companies. And then we have a Roth IRA as well. A Roth IRA is just a tax-free retirement account. Whenever if I triple my money on a stock, I double my money on a stock and sell it, you don't pay taxes because it's in a tax-free account. And it's so OP, Roth IRAs are so OP that you're only allowed to deposit $7,000 a year. They don't let you deposit anymore. And also, here's the main portfolio we're looking at. This is my buy and hold portfolio, where once I buy a stock in here, I literally just try and never sell it. Just buy and hold it for the long run. I have a strict way I pick the stocks in here. I'll find a stock and then just hold it on for the long run. Like some of these, like DocuSign. Man, DocuSign, I've held this, has it been over 2 years? We bought this October 2023. This is actually the day I started this portfolio was the day I bought DocuSign. So this account that I made right here, I started this exact day when I bought DocuSign. And Yeah, here's the portfolio. And here's how we're doing year to date. Year to date, we are up 29%, pretty crazy, versus the S&P only up 7.3%. If we go to all time in here, we are up, let's see. Good night, bro. Love these streams. I'll pop in on TikTok. Hey, thanks, Plasma. Thank you, man. And thank you, Applesauce. Thank you, Brandon, Plasma. And Jay said, hey, Nathan, I found you on TikTok and subscribed a few days ago. I was wondering if you have any beginner's guide vids. Oh, hey, thank you so much, first of all, for coming to the YouTube stream. Uh, I have a video. I made it about a month ago. It's called like how I analyze a stock. So if you want to see like a proper way to analyze a company, just go to some of my more, it's like a month ago or so. It's like how I analyze a stock. Or hey, just go check out my channel. I don't sell anything. Like most people would be like, yeah, you're a beginner. Go buy my course. Go buy my book. But I don't have any of that. I don't have a course, a book. I'm literally just, the best way to probably learn from me would probably be just watch the live streams or watch the YouTube videos. But yeah, thanks, man. I do appreciate you. And look at this. Here's all my deposits right here. Every time I deposit, it's a little blue circle. But yeah. And then finally, sorry, we have our Weeble account right here. This is my main growthy portfolio where I own a lot of risk on names where I think they're going to do good in the long run. So Dave, Robinhood, it's been our best performer. Wow, we're up nearly 700% on Robinhood. I regret every share I've ever sold of them. Hey, wow, the overnight market is really green. FUTU, this is a Robinhood competitor. AMD has been a good one. SoFi, Supermicro, Reddit, PSIX. This is my most recent purchase, by the way. PSIX. I've been kind of telling people about this one. I wouldn't buy this one at 90. Actually, if this ever goes back to $70, that's where you'd probably want to check it out at $70. But yeah, PSIX, my most recent purchase. T-Row, high dividend play. Culmaine, this is the chicken egg producer we were talking about on here. I bought this one at all-time highs. I normally don't buy stocks at all-time highs, but this is one I felt okay with doing. So yeah, would it be better of you to combine the portfolios to increase your margin availability? No, hey, I've never taken out a single dollar of margin. I don't really recommend margin. You're basically actually, here's the thing. You're basically taking out debt to buy stocks. But let's say like I take out margin and I have to pay a 5% interest on the margin. Well, if I can invest this money I get from margin for over a year and make more than 5%, the margin pays for itself. But I don't do that. Actually, this app lets me take out margin. This app will let me take out $9,200 of margin, but I've never done that, never will, I hope. Yeah, hey, what up? Check it out. And let's see. Joseph said, why'd you buy PSIX? Yeah, I actually made a YouTube video about it in a short. Basically, I think this is the kind of company that's going to continue to hit all-time highs. I bought the stock at an all-time high. Look, my buy order is right there. I bought again, very small position. I think you want to start out with a small position, couple $100, maybe a couple shares, and then you only buy more after it's down like 10%. But yeah, I bought PSIX because I believe this is going to continue to win. They're only a $2 billion market cap. And the net income, the margins have really just expanded here. They're so growthy. They're making a bunch of net income now. The revenue's growing like crazy. They have a really good balance sheet. They have no net debt. So yeah, PSIX is just a very interesting stock. So yeah, that's the portfolio update. And by the way, my most recent purchases in here are Progressive, T-Mobile, and PSIX. And we're down on Progressive. They just reported earnings too. That's the weird thing. If you're looking for a stock that's not at all-time highs, like the S&P 500 at all-time highs right now, but this one isn't. And the fundamentals are incredible here. Look at the net income on the right, literal record, $3.2 billion of net income. So record net income quarter. Sales were also at a record. It's up 21% year over year. Record profit. They grew their margins too. Yeah, look at that record net margin. Man, I might for real go buy more Progressive. The one thing that this is like car insurance. If there's robo taxis everywhere in the future, insurance costs will go down, they'll plummet. But here's the thing, this company also does crazy special dividends. So Progressive, every year, every January, they do this special dividend to reward investors. They just spent $2.69 billion on the dividend. That was they did, and they can easily afford that because they just made $3 billion. So they just made $3 billion this quarter, returned $2.7 billion to shareholders through a dividend. When their normal dividend only costs $58 million. So yeah, Progressive, yeah, here's the special dividend that they did. They normally just pay you 10 cents a quarter. They paid you $4.50 as a special dividend. So you got a $4.50 instant return on every share that you own. So anyway, Progressive, every January, you should get a nice little special dividend with them. Insurance company, they own Flow. But yeah, I got to go. It's too late for me. Can't wait for the till 9:30 a.m. Yeah, hey, applesauce. Me too, man. This is the longest stream I've ever done in my life. I've never streamed for this long before, but I had a great time. I hope you guys have a great rest of your Sunday. I'm going to go ahead and hop off the stream here. What just happened, bro? Why are there 3 tabs of that? Anyway, yeah, see you guys later. Thank you so much for showing up to the YouTube stream. If you want to support me, remember, hit the like button, hit the subscribe button. We do the same stream every Sunday, this exact same time, and I stream every other day of the week too. So anyway, see you later. Hey, thank Judith. Thank you so much. Thank you, Sid. Hey, best way to support me, I sell nothing. I don't have a course book, Discord, WhatsApp, Telegram. Just hit the subscribe button and the like button. When's the next live stream? I'm probably going to do a live stream tomorrow. So yeah, and the next day. So yeah, see you guys later. Thank you so much.